in my way, cause surely this pain is worth the game. None of your niggas gon' stand in my way, cause surely this pain is worth the gain. Why you still pulling me back from getting what's mine? And nigga be broke as fuck. None of your niggas gon' stand in my way, cause surely this pain is worth the gain. Why you still pulling me back from getting what's mine? And nigga be broke as fuck. None of your niggas gon' stand in my way, cause surely this pain is worth the gain. Why you still pulling me back?
Welcome back, guys, to our YouTube channel. This is still your boy, your one and only mentor from EDU-GURUS video. You know when it got us, guys, then it got it all. So guys, today I will be focusing on PPE IS 16, guys. So the session or the content is specifically for my second year student, become accounting student, and also my first year student who are doing back. So it's for my first day become accounting student. Unfortunately, this question or this video is not on your level, but you can watch the video in preparation for next year. But we'll get there, so don't stress about that, because of now you're writing exams. So prepare what's on your level. So what's on your level for first year student, it's basically how to calculate the depreciation and transpose your depreciation amount to your financial statement. But as for second year student, or as for first year of PX student, you guys have to prepare general entries for recognizing an asset, depreciating an asset, from the date of purchase, the date of sold, including my first year student. They can also depreciate, or there is a high possibility that they may get the question of depreciating an asset from the date of purchase to the date of sold. But for the recognition part, like depreciating a certain part of a component, you guys are not dealing with that at this moment. So focus on what's on your level for the preparation of your exams. Then we'll cover everything, or we'll get more in details next year, guys. So all of accounting students who are doing IS 16, recognizing an asset, dealing with different components of the assets or within an assets, you guys are more than welcome to watch this video. I hope this video will be beneficial. So here, guys, I just realized during my tutorials, when I was busy tutoring everyone, I realized that people are struggling on how to depreciate an assets from the date of purchase to the date of sold, doing that long method. Remember, an asset start to depreciate from the date we started to purchase it, right? So in case whereby we are going to dispose in an asset, we have to recognize that particular asset. So we have to write everything that we have been writing or recording about that asset. We have to write it off, right? So it's an issue when some of the information it's not given, like your accumulated depreciation at the beginning. So it's an issue, it's a problem to most of the students to depreciate an assets from the date of purchase to the date of sold, so that they can get what we call accumulated depreciation. But don't worry, today is your day. We'll be dealing with that problem. So I hope the problem will be sorted out. So guys, please watch this video. Let's reach the channel to 1K, guys, before we are writing, or before we are going to write our examination. So please bear with us. This session is very, very important. So our first video, I can see my fellow grade 11s, my fellow grade 12s. I dropped the content for my grade 11, my grade 12 based on fixed assets. Most of my grade 11, my grade 12 learners, they didn't watch the video, and trust me, guys, that video is very, very, very important and useful. It's everything basically that you have to know about fixed assets on your level, guys. It's everything that you have to know, and it will be a problem if you don't master that in your level, because of when it comes to this part, now when it tend to be property, plants and equipment, or it tend to be IS 16, then it's gonna be something else. So if you don't have the basics of fixed assets from your high school, then it's gonna be a problem. Hence I'm saying it's very important to watch the first video from my grade 11, my grade 12, so that when you are going to continue with accounting in tertiary, you'll be able to know your basics and everything. You can see like some of the things that we're going to do here. It's some of the things that we have learned previously in high school, but then When it comes to tertiary, remember we also have people who don't have accounting background, so we also have to accommodate those people. So today I'm going to take you to each and every necessary step that we have to take when we do IS 16 or PPE. So please listen attentively. So basically this question, it's my own question, the question I've said. So I'm not going to issue any of my videos presenting someone's question. No, I'm going to present my own questions. Some of the people that say my questions are more difficult, but trust me, they are very beneficial and they do develop your accounting skills, right? So guys, we still have a print running out here, guys. So we have t-shirts. If you want one of our t-shirts, it's 260. It's 260. We deliver all around South Africa. So if you want one, you guys can text me on 083 427 3112, or you can send us an email or order via email edu101gurus@gmail.com. Right. So starting from this month end, guys, very important thing that I've just have to address, right? So starting from this month end, guys, as the gurus tweeters will be providing you guys with a monthly mentorship. So in this monthly mentorship, guys, we are going to host our session on weekend, only on weekend, guys, not during the week. So the purpose of us hosting or having this program of monthly mentorship, it's for preparation of your exam, guys. So all my grade 11s to my second year tertiary student, no matter which tertiary are you attending, as long as your content it does match with our content, then you are more than welcome to be part of monthly mentorship, guys. So in our monthly mentorship, we offer online sessions only on weekends, right? Only on weekend. We offer a monthly mentorship whereby we'll be teaching you guys each and every weekend. So the maximum hours, if you want to be part of the monthly mentorship, the maximum hours per month, at least it have to be 10 hours, not more than that. So if you want to be part of monthly mentorship, guys, you have to pay exactly at the beginning of the month. So we are going to give you guys 20% discount of the normal price that we charge for our private session. You know, guys, they differ according to your grade 11. It will be 50 rand for certain hours and so on and so forth. I will give you guys an advert, but then I just want to clarify something. When you want one-on-one session with us, no matter where you are in Limpopo, wherever where you are, we are going to provide you guys with the online session, right? For the same, with the very same price, the price they don't change. But if you want a monthly one, you have to pay at the beginning of the month. Then we give you 20% discount, right, from what we have been charging on our private sessions. I want to make it this clear. But if you fail to pay at the beginning of the month, then we will charge you per hour for each and every session that we're going to provide you guys with. Right, we'll charge you per hour and you will not qualify to get 20% discount. So people who are going to qualify to get 20% discount, they are only people who pay at the beginning of the month. I hope that is clear, guys. So I hope we will work together, we will not fight, and I hope it's fair enough. Fair enough. So let's get back to the business of the day, right? So what I'm going to do here, I'm sorry for the module code. So what I'm just going to do here is I'm going to analyze the question here in the world, right? Then I'm going to move through to my Excel to do my calculations here. But for now, I'm just going to analyze the question with you guys here on Excel so that you guys can understand the question as a whole, right? PPE. So let's just like take a quick break. Then from there, we will come and analyze the question. A quick one. Welcome back, guys, to a short break. So now we are going to analyze the question. After analyzing the question, then we are going to do the calculations. All right. Okay. One thing that I want to emphasize about this question, it doesn't include PPE as a whole, right? But the purpose of the question or of this content is to show you guys on how to depreciate. Sorry. The purpose of this content or of this session is to show you guys on how to depreciate an asset from the date of purchase to the date of sold, right? So basically, we are just going to deal with the derecognition and the depreciation. Depreciating in an asset from the date of purchase to the date of sold if you are not given the accumulated depreciation at the beginning. Remember, when it comes to the derecognition, that's whereby we're going to write off the assets. That's whereby we are going to write off the assets. Why? Because of that assets, it's no longer part of our assets of the business, right? So we have to show the effect into our accounting entries that we are no longer having these assets. So whatever we have been recording about these assets, now we have to take it out of the book of the business, right? I hope it's clear. So as for calculating a certain component of an asset, I will take you guys, like I will drop another video on how to depreciate the components and also certain parts of the components. Remember, an asset is an asset with components, right? We may have the assets, we may have the body of the assets, then on top of the assets, we may have the components. Then on top of the components, we may have some certain parts of the components which are not like independent, right? So we have the assets as a whole, right? So an asset, it may have the body it may have its own useful life. Same applies as the components in the assets, right? So the components in the assets, they may have its certain useful life. So meaning they are independent from the body or from the asset as a whole, right? They are independent. They don't depend on the assets or on the useful life of a certain body or of the assets as a whole, but they have their own its useful life, meaning they are independent, meaning we can calculate its depreciation of each and every component separately without depending on the whole assets or without depending on the body of the assets, right? But if we have some certain parts of the assets that we want to depreciate, let's all agree that a certain parts in a component, it depend on a component, right? A certain parts of the components, it depend on a component, meaning it is not independent. It depend on a component. So we are not certain about the depreciation or we are not certain about the useful life of a certain part of a component, right? So in that case, it became an issue when it comes to my students. It became an issue when it comes to my student, but we did a lot of questions with some of the students, but it's confusing some way somehow. But we will issue a specific video or a special video on how to depreciate a certain parts of a component which is independent, but it depends on a component. I hope it makes sense. We have the body in an asset, and an asset is formulated of the body and also some of the components. So if it happened that maybe a certain part of a component, maybe it get destroyed, then we have to derecognize it and replace it with another part of it. It would be an issue because of that part. It depends on a component, so its depreciation, it will be otherwise. So I don't want to confuse you right about now, but I just wanted like to give you guys some clarity to make like sense out of it, so that you guys, when we are going to cover a video, so that you guys have some knowledge and it makes sense out of you guys so that you guys won't struggle ever again with some certain questions. So now let's analyze this a lovely question here, my own question. MTP2 Ltd is the biggest delivery company in South Africa. The company has been operating for a period of 5 years. Very important information. The company has been operating for a period of 5 years. So let us just highlight it. With the financial year ended 28 February, right? So with the financial year ended 28 February, let's just choose another color for that. So with this information that you are given here, guys, with this information that you are given here, it's very important to use this information to prepare your financial year, right? So our accounting entries and everything, they will depend on your financial year. So with the first information, prepare your financial year and check the required which financial year are you supposed to prepare your accounting entries on. It says prepare general entries for the year ended 28 February 2022, then disclose with the reference of IS 16 property plants and equipment, the note of property plants and equipment to the statements of financial position of MTP2 Ltd IS 28 February. So the first requirements, it requires us to prepare the general entries, right? Then it requires us to disclose the very same information into property plants and equipment note, right? So what would be all the necessary general entries? Remember, if we are within this current financial of 2022, maybe we bought an assets, we have to show, we have to recognize that particular cost or that particular assets, right? So we have to show the effects. And remember, when the asset it start to be used or it starts to operate, it have to depreciate. So we have to show the effects of the depreciation of that particular assets. That's the necessary entry that we're talking about. Then again, if we recognize an asset or disposed assets, we also have to show the effect. We have to show the derecognition process. So let's just like analyze the question. Then I will take you guys to everything or each and every general entries that you have to know, right? Okay, then summary of the delivery truck that were purchased on the 1st of March 2017. All trucks were bought from MH dealership. Then it says excluding Tata truck. Excluding Tata truck, right? And let's go to our summary of all these assets. So for number one, we have Mercedes-Benz. It have historical cost. Historical cost is the same as your carrying amount or your cost price, right? So we bought a Mercedes-Benz truck with the cost price of 5 million. Then it has the residual value of 500,000. Then the date of purchase, we bought these assets on the 1st of March 2017. Then it have the useful life of 1 million kilometers, right? So if you get something like this that talks about the kilometers, the useful life being in a form of kilometers, just know that like the kilometers, guys, are accumulative. The kilometers are cumulative, right? So when you're going to get like a summary of your kilometers, just know that it will include the kilometer from the day the asset is started to travel up until the end of the current financial year that you are given or that you're focusing on. So the kilometers that you'll be given there, it's the kilometers that the assets have traveled from the date of purchase to the current financial year that will be required to prepare your financial statements on, right? So meaning it includes the depreciation for all of these years. So we can regard that kilometers that you'll be given as your accumulated kilometers at the end, right? Then in case whereby you have to calculate the kilometers that were traveled during the current financial year, during the current financial year, meaning we want to calculate what? We want to calculate our depreciation. Then you have to subtract your kilometers at the beginning by your kilometers at the end so that you can get the kilometers that were traveled during the current financial year. Why? Because of the kilometers accumulative. So each and every kilometers that you're going to get there, it will be a total of kilometers the assets have traveled from the day it started to operate up until the end of the current financial year, that will be specifically focusing on. I hope it does make sense. So don't regard that kilometers that you are given as your kilometers for the current financial year unless the information is stated otherwise. But in case whereby the information it doesn't state otherwise, or it doesn't specify that these kilometers are only the kilometers that were traveled during this current financial year, then conclude it as if these are the kilometers at the end of the current financial year. So meaning it's the kilometers from the date it started to operate or started to travel to the end of the current financial year that we're focusing on. I hope it does make sense, because of this kilometers method, it confuses a lot of people. The kilometers are cumulative, right? The kilometers are cumulative. Then we have the fourth with the cost price of 1,900,000, then residual value of 190,000, same date of purchase, and so on and so forth. But then we have our Tata truck here. It had the historical cost of 1,790,000, no residual value. It was purchased on the 1st of March. Then it had the useful life of 7 years too. Same applies as Nissan truck, and so on and so forth. Then we have something like an indicator. This is an indicator that there is more information behind this Tata truck or about this Tata truck. So let's focus on the very same star or indicator that are given to get more information about this particular truck. It says the Tata truck was brought into use. Very important information. Very important information on the 1st of March 2017, right? So even an asset it start to be brought into use, it doesn't necessarily mean that that particular asset it have to start to depreciate from the 1st of March. Remember, when it comes to accounting, and an asset is start to depreciate from the date it is ready for use, not from the date it is brought into use. Please, guys, this is very important. So an asset is start to depreciate from the date it is ready for use. So meaning when we are saying it is ready for use, maybe there was some inspection or anything that was added on top of that asset. Maybe there was some inspection that was done to the assets, or there was something necessary that was done to the asset so that it can be ready to be used, or so that it can start to operate. But by the time you start to put it into use, it doesn't necessarily mean that this assets then it is in good condition for us to use it. So there's a high possibility that if it's brought into use, we cannot regard it as an asset after some certain things they are provided or they are done into that particular assets. Remember, an asset is something that you have to produce economic benefit, right? And an asset is something that have to produce economic benefit, right? So meaning it have to do something, then you get something in return. That's the meaning of economic benefit. So in case whereby these assets, let's take this part as part of our example trucks, right? So if we have trucks, but this truck doesn't have a trailer, then we cannot regard that asset as if it's going to produce economic benefit because of it doesn't have a trailer. So it need a trailer for it to render the service, so that we can get something in return. Yes, we can buy this asset on the 1st of March 2017, but up until we brought the trailer or up until we buy the trailer, that's whereby we will are going to start to produce an income, get something in return, produce economic benefit, so that we can also gain from our assets. Then it qualify, after it have a trailer, then it qualify for it to be called an asset. Why? Because of now it can produce what we call economic benefit. But it being there without operating, then we cannot regard it as an asset, even though it it have some commercial value, even though it can do some of the work, but because of it doesn't do what is required, or it does like not operate, or it does not produce economic benefit, then it doesn't meet the term or some of the terms or concepts of the assets. I hope it does make sense. Hence, we are saying the assets, it will start to depreciate once it is ready for use, not by the time it was brought into use. I hope it does make sense. When it is brought into use, it's not a full asset. There are some of the things that need to be happening, or there are some of the steps, or some anything that have to be done, development, adding something on top of it, so that it can be able to produce what you call economic benefit. So let's continue with our information. Then, very important information, but it was ready for use on the 30th of August 2017. Then that's whereby our assets, it will start to depreciate. Our assets, it will start to depreciate on the 30th of August 2017, not on the 1st of March 2017. So let us just like continue with the information and get the reason why this asset, it was ready for use on the 30th of August 2017. Why? We will get more information when we continue the information. After the installments of the trigger, after the installment of the trigger, let's continue with this information and hear why this trigger is necessary or important. All of MT P2I LTD trucks cannot operate without the installments of the trigger, meaning it's their policy. So meaning we can buy an assets as MTHP2I LTD, but without us installing it, the trigger, we cannot use it, right? So it can be there, but without us installing the trigger on it, it cannot operate. It will just stay there. So meaning by that time it is put into use, or by that time we are still looking, or we are still going to install the trigger, but we did not like install the trigger yet, meaning that assets, it cannot produce an economic benefit, right? So we cannot regard that asset as if like we cannot regard that truck as if like it's an asset. Why? Because of installment of the trigger. It cannot operate, it cannot produce economic benefit without it being installed, without the installment of the trigger, right? So that is why this assets, it was ready for use. It was ready for use on the 30th of August 2017 after the installments of the trigger. Then if we want to calculate our depreciation within the current financial of 2017 to 2018, then this asset, it will have to depreciate starting from the 30th of August to the 28th or 29th of February 2018, right? Then it says, further continue saying that MTP2I had an agreement with their supplier MH dealership to install the trigger into each and every truck they purchase from them. Let's go back to our summary. Our summary says summary of the delivery truck that were purchased on the 1st of March. All trucks were bought from MH dealership. The same MH dealership we are getting here in our additional information when we continue. What's happening with this MH dealership? They had an agreement with MTP2I LTD that they have to install the trigger into each and every truck they purchase from them. The reason why this one Tata truck, they didn't install trigger from it, it is because of the Tata truck, it was not bought from MH dealership, but it was bought on the 1st of March 2017, but it was not bought from MH dealership. They didn't have an agreement with other supplier, but they had an agreement with MH dealership that whenever I'm going to buy the assets on you, you have to install the trigger. So meaning immediately when I start to buy an assets from MH dealership, then it is ready for use on the same date. Why? Because of it have installment, or because of it have a trigger on it, meaning it can produce economic benefit, right? So let's continue the information to get more information. Then it says the price of the tracker will be included into historical cost of each truck they purchase from MH dealership. I'm sorry for not including that, but the price, it will be included into MH dealership. So meaning Mercedes-Benz, the Ford, and the Nissan truck, they include the cost of the tracker, right? Then SMH dealership was out of Tata truck. So meaning now we know the reason why this one Tata truck, it was not bought to or from MH dealership. Why? Because of this MH dealership, they were out of Tata truck. Then MTP2 Ltd decided to purchase a truck from auto dealership. Did they had any agreement with auto dealership? No, they didn't have an agreement with auto dealership that whenever I'm going to buy or purchase a truck from you, you have to install the tracker, right? So we can conclude that this cost price or historical cost price of Tata truck, it does not include the cost of the tracker because of they never had an agreement with auto dealership. Can you guys see how am I analyzing the information? Analyze the information. You may not get this type of question from your examination, but like then as an accounting student, like just try to fight, just try to analyze the information, try all your best to analyze the information. The reason why I want to take you guys to the process of analyzing, I want you guys to understand the information as a whole, because of when it comes to examination, right, they will trick you with some of the information, but when you analyze your information, you'll be able to get everything correct. So the reason why I included this long paragraph here of that track, this whole process, I want you to go to thinking process. I want you guys to think out of the box. I want you guys to know how to analyze the information. Have your highlighters always. Highlight where you have to highlight where is necessary so that you can get a closure about a question. Okay. Then they purchased this truck from auto dealership. This price here of the truck doesn't include the cost price of the tracker. Why? Because of they never had an agreement with auto dealership that whenever I'm going to purchase from you, you have to include the cost of the tracker on your cost, right? So because of this tracker, it's a necessary cost. It have to form part of the cost of the truck, right? So this amount of 1,790,000, we cannot regard it as like this is the cost of the truck that we have to recognize in our PPE note. Why? Because of that price, it doesn't meet any criteria of an assets, right? Remember, when it comes to PPE note, we only take into consideration the assets. But according to this company's policy, without the installment of the tracker, each and every vehicle or property you're going to purchase, we cannot regard it as an asset until you include the necessary cost. And the necessary cost for this truck or for this asset, it is a tracker. I hope it makes sense. Then they say, we further continue with the information. It says the installments of the tracker, they install it from MH dealership on the 30th of August 2017. That is why on the 30th of August 2017, the asset was ready for use. Because of that's when we include or we installed our tracker. So the tracker, it was installed with the cost of 10,000. So we will add 10,000 to 1,790,000 and get the total cost of the Tata truck, or get the price of Tata truck that we have to recognize in our PPE note. I hope it does make sense, guys. Just analyze your information. You may not get this type of question in your examination, but know how to analyze your information. I wanted like to take you guys to the process of analyzing accounting information. Know your necessary cost. So I wanted to test you guys whether you will be able to recognize the necessary cost that you have to add in your assets for it to qualify to be called an asset, right? We don't just like recognize the cost as it is, but we also have to recognize all the necessary cost of the assets. Then let's continue with our additional information. If I continue saying additional information number one, on the 1st of September 2021, remember, we are required to prepare our financial year, our accounting entries for the financial year ended 28 February 2021. So meaning our financial year will start from the 1st of March, from the 1st of March 2021 until 28 Feb 2022, right? Till 28 Feb 2022. So let's say what happened within this current financial year. So as we look according to additional information, it says on the 1st of September 2021, which is exactly within the current financial year that we are required to prepare our accounting entries on. So let's say what happened within this current financial year of 2021 to 2022. It's on the 1st of September 2021. MTP2I Ltd sold the Tata truck for cash. Okay, with this information, let's try to get something important about this one. It says MTP2I Ltd sold the Tata truck. Sold. So immediately when you hear the word sold, just know that you have to derecognize an asset. We have to derecognize an asset, right? So what do you mean when we're talking about derecognized? So the derecognized, that's whereby we are writing off that particular asset. Remember, by the day we start to purchase our assets, we have to show the effects in our PPE note that there was additional assets that we purchased, right? So you're going to recognize its cost price. So if it was bought during the current financial year or immediately at the beginning of that particular current financial year, sorry for the cut-offs. I'm sorry for the cut-off, guys. So let's start from additional information. Additional information 1, right? So it says on the 1st of September 2021, MTP2I Ltd sold the Tata truck. Don't remember what I said to you before the cut-offs. I've said to you by the time you guys are going to see the part of sold, you just know that we have to recognize an asset. We recognize an asset when the asset is sold, where we recognize an asset when the asset reached its useful life. We also recognize an asset maybe if it happened that it have broken down, then we won't be able to use it again. Then we have to recognize that particular asset. So there are some of the important things when it comes to derecognition. What do we mean when we're talking about the derecognition? When we're derecognizing an asset, that's whereby we are writing off the assets out of the book of the business. Remember, we have this a special note known as PPE note, which is specifically focusing on the records of the assets, right? So everything that we have been recording about that particular assets in our PPE note, now we have to take it out. What we have been recording in our PPE note about the assets, we record the cost price of the assets, we record its depreciation or its accumulated depreciation. So that's everything that we have to take it out of the book of the business or out of our PPE note. I hope it does make sense, right, guys? So what is important here, or the most part that confuses a lot of people, is to recognize accumulated depreciation if it's not given. Guys, let's talk about the accumulated depreciation. I hope it will make sense of time. You guys know in the meaning of accumulated depreciation, right? So when you're talking about depreciation, we are talking about the depreciation or the value that the assets have lost since from the day it was ready from use up until the date you will be recognizing it, or up until the date of the current financial year. I hope it does make sense. So what we are looking for when we are talking about the derecognition, we are looking for accumulated depreciation at the end, which is accumulated depreciation at the beginning plus the current depreciation if the asset it was used during the current financial year. But if it was used or if it was disposed at the beginning of the current financial year, then we will be looking out at accumulated depreciation. We'll be writing off its accumulated depreciation at the beginning instead of writing off the accumulated depreciation at the end. Why? Because of it was not used during this current particular year. I hope it does make sense, right? So now we have to look out for the cost price of that assets. We're not talking about the recognition. We have to look out for the depreciation of that assets if it was sold. Therefore we will have the selling price. We have to show the effect about the selling price too, and also you have to take into account the loss on sale of an assets or a profit on sale of an assets if we dispose it with the higher selling price than it worth, meaning we have to look out for our carrying value at the end, meaning we're taking our cost, subtract our accumulated depreciation at the end, then we'll get our carrying value. That carrying value that we're talking about, it's actually the worthness of that particular asset. It's worth this much. So in case if you want to dispose it, you have to dispose it with that particular amount. Then if that's the case, then you won't be able, or you will not be generating any profit or loss. But if you dispose it with the higher selling price or the cost than with the higher selling price than it worth, meaning the higher selling price than its carrying value, then you will generate a profit. The difference, it will be a profit. But if you dispose it with the lesser value than its carrying value or than its worth, then the difference between the carrying value and your selling price, it will be a loss. I hope it makes sense. So don't prepare a T account and make the balancing figure on your T account of the disposal maybe a profit. If it's on the balancing figure, it's on the debit side, then you say no, it's a profit. Then if your balancing figure is on the credit side, then it's a loss on sale of an assets. No, that's not how we're doing it. Yes, it will work out, but like then understand your principle, understand the terms, understand the meaning of your carrying value, understand the meaning of your selling price, right? So I hope it does make sense, because of in most of the cases you'll be wasting a time. You'll be wasting a time in examination because of in some of the cases there will be only, like if you're going to do IAS 37 or cash flow statements, right? Whereby maybe you will be required to identify your selling price and everything, then you will have to prepare T accounts and waste the time, while you can just like work with your carrying value and whatever you have there. So it's not necessary to prepare your asset disposal account in some of the questions, but like then if it work for you, then continue with it. But for the sake of time, understand the principles and your time and everything. So it says on the 1st of September 2021, MTP2I Ltd sold the Tata truck for cash to the local supplier JJ Transporter with the selling price of 1,234,125. So this is our selling price or proceed on sale of an asset, right? Then the new Mazda Bong truck, with the cost price of 1,200,000, including the trigger. So meaning this cost, we can say this is the original cost price of the Mazda Bong truck. This is the cost price that we have to recognize in our PPE note or in the book of the business, right? Why? Because of it includes the necessary cost of the trigger. So it was ordered and brought into use on the same date. So meaning this particular asset, it will start to depreciate on the 1st of September 2021. Why? Because of the necessary items or any necessary assets. We can say that because of these assets, it cannot operate without a trigger. So it's part of an assets too, right? So the trigger is part of an assets too. So because of the trigger, it was it was included into this cost price, right? So meaning by the time you are going to buy these assets on the 1st of September, it will be used or be ready for use on the same date. So it will start to depreciate from the 1st of September 2021. So it says with the useful life of 5 years, with the residual value of nil. So you don't have any residual value for master bond track. Then we continue with our information, additional information 2. On the 30th of December 2021, MTP2Y Ltd donated their fourth truck to merely local delivery after one of their truck was banned during routing while they were delivering one of their clients' goods to KZN. So in this case, what happened? We donated one of our assets to whoever we donated to. So in this case, we also have to derecognize. We derecognize when we donate an asset. We derecognize if a certain parts of an asset maybe get damaged or been destroyed, then we replace it with another one. And also we derecognized when we sell an asset or dispose an asset. Then let's go to our depreciation formula. So our depreciation formula for Mercedes-Benz truck, okay, Mercedes-Benz truck, we have to depreciate that assets according to the kilometers traveled, right? So at the end of the current financial year between 2017 and 2018, this is the total kilometers that these assets have traveled, right? Then within the current financial of 2018 to 2019, this is the kilometers that the assets have traveled, including the kilometers that were traveled within the current financial of 2018. I hope it does make sense. Then we move all along to the kilometers of 2020. These include the kilometers that the assets have traveled since from the day it started to operate up until 28 February 2020, right? So please, kilometers are cumulative. This kilometers of 20,000, it include the kilometers that were traveled on 2019, 2018, and also 2020. Same applies to 2021. It includes the kilometers traveled from 2018, 2019, 2020, and also for 2021. Then the 2022, it would include the kilometer traveled for 2018, 2019, 2020, 2021, and also 2022. Right. Then it says that data is depreciated using the diminution balance method with the rate of 10%. This is the problem. This is what most of the students fail to do, right? I hope you guys are aware we are about to finish the information and we are going to the required. Up to so far, we were not given any additional information about our trucks. We were given the date when we purchased the assets together with their cost price and also the depreciation method that the entity used to depreciate the assets, but we were not given any of accumulated depreciation at the beginning for any of the assets. So in this case, we will have to depreciate the assets from the date of purchase to the date of sold. Why? Because we are required to generalize and also to prepare a PPE note. So if you are required to prepare a PPE note, we have to ensure that we have our accumulated depreciation at the beginning of all the assets and also the current depreciation of all the assets. And in case whereby we have derecognized, right? Remember, according to additional information 1 and 2, there was a derecognition, right? So if we have our derecognition, we have to ensure that we have our accumulated depreciation at the end so that we can derecognize that particular assets, right? So if you're required only to prepare the general entries, then you should have not taken into consideration the assets that they were not disposed. Like you cannot calculate the accumulated depreciation at the beginning for the assets that we didn't dispose or we didn't recognize. Why? Because we will be only looking out for its current depreciation and generalize its current depreciation. But when we recognize, we are taking out everything of that asset. So we have to calculate its accumulated depreciation unless those assets that were not disposed, maybe they were using a diminishing balance method. Then that's whereby you will have to to depreciate an assets from the date of purchase to the date of sold, so that you can get your accumulated depreciation at the beginning and apply your diminishing balance method consistently. So let's just like take a quick break. Then from our quick break, I would be going to Excel and do my calculations there, right? I will be doing my calculations there. So I will try to be a little bit slow, explain everything so that you guys can be confident enough with PPE. Like PPE, guys, it's specifically based on the principle. You can write PPE unprepared. That's what I'm sure about. You can write PPE unprepared if you know your principles. There's no need to prepare for a PPE. Maybe if you're going to write, there's no need if you know your principles. So let's just like try to master these principles, and I hope this video it will be beneficial. I hope this video it will be beneficial. But now let's just like take a quick break. Then I'm going to go to Excel and do my calculations there, right? Yep. Quick one. Welcome back, guys, to a short break. So this is what I'm going to do, right? I'm going to start with Mercedes-Benz calculating its depreciation. Then I'm going to do Ford calculating its depreciation. And remember, the Ford, it was derecognized to, right, according to additional information 2. Then I will do Tata Truck doing its depreciation, accumulated depreciation, everything, depreciating it from the date of purchase to the date of sold, right? Then I will be moving all along to Nissan Truck, calculating its depreciation, depreciating it from the date of purchase to the date of sold. Question: why do we have to depreciate these assets from the date of purchase to the date of sold? The reason why we have to do that, it is because of, according to the required 2, we are required to disclose with the reference of IS 16 property plans and equipment, the notes on property plans, the note on property plans and equipment to the statements of financial position, right? So we have to prepare a PPE note. Then take the very same carrying value at the end to transpose it to statements of financial position, because of when it comes to statements of financial position, we only take into consideration the carrying value or the carrying value at the end of all the assets. That's the one that we have to recognize in our statements of financial position, right? So let's start first with the Mercedes-Benz truck. So let me just try to copy this information of Mercedes-Benz, the kilometers, so that we cannot go back and everything, and paste it here in my Excel sheet. Excel, it's acting up. Excel, it's full of drama. No, it's okay. Welcome back, guys, from a quick short break, right? So now we will be performing our calculation on Excel, right? So what I did here, guys, I just like took the information from our question, the cost price of 5 million, the residual value of 500,000, the date of purchase, and the total kilometers of the useful life kilometers of Mercedes-Benz. Then I've like taken also my kilometers that the assets have traveled from 2018 to 2022 and passed it here in my Excel, but in a special column or in a special table. So here is my cost price. Same, it come from my question paper, same as applies as my carrying value, and the total kilometers the assets can travel, or rather the useful life of the Mercedes-Benz truck, right? So here it's my column for kilometers. So it's kilometers from 2018 to 2022, right? That's a cumulative for column 2. This These are my cumulative kilometers, right, from my question. Then in column 3 here, I just calculated the kilometers the assets have traveled within the current financial year. So how do we come across this column 3 here? Remember, the kilometers are cumulative, right? So the kilometers that are given here in 2019 February is the total kilometers the assets have traveled since from 2018 to 2019. Same applies to 2022. These kilometers of 20,000 that were given is the total kilometers that the assets have traveled from 2018 up until 2020. And so on and so forth, right, guys? So for us to get the current kilometers the assets have traveled within that specific year, so for 2018 is the same. It's the same kilometers. Why? Because of the asset started to be used within the current financial of 2017 to 2018. So the same kilometers are the same kilometers that were traveled within the current financial of 2017 to 2018. Then for me to get the total kilometers the assets have traveled within the current financial of 2018 to 2019, I have to take this 15,000 subtract by 10,000, then I will get the total kilometers the assets have traveled only within the current financial of 2017 to 2018 to 2019. Same applies to the current financial of 2019 to 2020. I will take 20,000 subtract by 15,000 to get the total kilometers the assets have traveled within the current financial of 2019 to 2020, which is 5,000. 20,000 subtract by 15,000, I'll come across 5,000. Then for me to continue with the total kilometers or getting the total kilometers the assets have traveled within the current financial of 2020 to 2021, I will take the total kilometers for 2021 subtract by 2020, then it will give me the total kilometers the assets have traveled only within the current financial of 2020 to 2021. Same applies to the current financial of 2022. This is the total kilometers. 60,000 is the total kilometers the assets have traveled from 2018 to 2022. So I will have to subtract 60,000 by 30,000, then it will give me the total kilometers the assets have traveled within the current financial year of 2021 to 2022, which I came across 30,000 as the total kilometers the assets have traveled within the current financial year. So to prove that this is the total kilometers the assets have traveled since from 2018 to 2022. If you are going to add all these current kilometers the assets have traveled, it will give you 60,000. Meaning these are the kilometers the assets have traveled for 2018, 2019, 2020, 2021, 2022, which will add up to 60,000, which is the total kilometers that the assets have traveled. I hope now it does make sense, guys. Try to make sense out of it so that it can make sense on you, right? So now I have to calculate my depreciation for current financial of 2017 to 2018. I will take my cost price, subtract by the residual value, then it will give me by depreciable amount of 4,500,000. Then I will have to multiply it with the kilometers the assets have traveled within the current financial of 2017 to 2018, then divided by the total kilometers the assets can travel, which is 1 million, it reaches 1 million. Then it will give me the depreciation for the current financial of 2017 to 2018 as 45,000. I hope it does make sense. Guys. Right, so now I'm going to calculate or continue further calculating the depreciation for 2018 to 2019. So let me just do this now. Let me just track down the cost price and also the residual value and also my depreciable amount here. Okay, then my Excel decided to perform the calculations. Let me just clear the content. Then let me just write it as it is. So it's 4,500,000. Then let me just track the same amount. Sure. Then this is my depreciable amount. It's constant. It doesn't change, right? Then this star here, it represents multiplication, guys, right? So now we are moving all along to the current financial of 2018 to 2019, calculating the depreciation, right? What is my depreciable amount? My depreciable amount is constant. It's 4,500,000. Then I have to multiply it with the total kilometers the assets have traveled only within the current financial of 2018 to 2019, which is how much? Which is 5,000, guys. So I will take my 5,000 here, 5,000, then divide it by the depreciable amount, right? Which is 1,100,000. 1 million. I'm saying 100,000. I like money. Huh? So it's 1 million, right, guys? So for me to get my depreciation for 2017 to 2018, I have to take my depreciable amount, multiply it with the kilometers the assets have traveled within the current financial of 2018 to 2019, then divide by the total kilometers the assets can travel. Then let's check how much do we get as our depreciation for 2018 to 2019. My depreciable amount. Oh, so it's actually my depreciable amount. I have to multiply it with the kilometers the assets have traveled within the current financial of 2018 to 2019, which is 5,000, then divided by my depreciable the total kilometers the assets have traveled. Then I come across my depreciation as 22,500 for the current financial of 2018 to 2019. Then let's move all along to the current financial of 2019 to 2020. How many kilometers does the assets traveled within the current financial of 2019 to 2020? I come across the total kilometers of 5,000. So it's 5,000 kilometers divided by the total kilometers the assets can travel, which is 1 million. Then I will get my depreciable or my depreciation. I like depreciable amount. So I will get my the depreciation for 2019 to 2020 as same applies 22,500. But like then let's perform the calculation, then multiply by the kilometers traveled within the current financial of 2019 to 2020 and divided by the total kilometers the assets can travel, then it's 22,500. Yep. Then this will be my depreciation for the current financial of 2019 to 2020. Then let's move all along to 2020 to 2021. How many kilometers did the assets traveled within the current financial of 2020 to 2021? I get 10,000 kilometers. So it's 10,000 kilometers divided by 1 million. Then I will get my depreciation for the current financial of 2020 to 2021 as what? Let's perform the calculation. It's my depreciable amount multiplied by the total kilometers the assets have traveled within the current financial of 2020 to 2021. Then I have to divide it with the total kilometers the assets can travel. Then I will come across my depreciation as 45,000. So this will be my depreciation for the current financial of 2020 to 2021. So moving all along to the current financial of 2021 to 2022, how many kilometers did the assets traveled within this current financial year? These assets traveled 30,000 kilometers, then divide by the total kilometers the assets can travel, which is 1 million. Then how much would be my depreciation for the current financial of 2021 to 2022? I have to take my depreciable amount, then I have to multiply it with the kilometers the assets have traveled within the current financial of 2021 to 2022. Then I have to divide it with my depreciation kilometers. Then I will come across my depreciation for 2021 to 2022 as 135,000. I hope it does make sense, right? So now let's calculate our accumulated depreciation at the end for these particular assets. So my accumulated depreciation at the end for Benz. I have to add all my depreciation starting from 2018 2017 to 2021, right? So let's use the sum function. I have to add my 45,000. So before I do this, let me just write my 40 include combine my 45,000 so that the Excel can give me the correct amount. So for that, then it's 45,000. Yep. So it's 45,000. Then for me to get my accumulated depreciation at the end for pence, I have to sum all my depreciation from 2017 to 2021. Then I will Excel has given me the wrong amount. Okay, so let me just say sum function. Okay, then 270,000, this would be my depreciation or accumulated depreciation at the end for pence, right? I hope it does make sense. If it still doesn't make sense, guys, please feel free to comment on the comment box there. I will try to attempt each and every student question, or you can just WhatsApp me on 083 427 3112. Then be specific when you send your text. Be specific. You are asking me, or you have sent the text based on this and this and this and this. Right? So now let's continue with our information. Remember, the long process that we are doing here, guys, right, is to calculate the accumulated depreciation at the end and also the current depreciation so that we can use the very same information and transpose it to our PPE note. That's the reason why we are going to do this long process. But if the accumulated depreciation at the beginning it was given, we wouldn't like have to go to this long process of calculating the depreciation from the date of purchase to the date of sold, or from the date of purchase to the current financial year that we are focusing on, right? So it would be just like simple, only focusing on the current depreciation. But now, because of accumulated depreciation, it's not given. So we have to go to this long process. I'm sorry for the background noise, but then I don't have choice but to continue on this noise, right? You know, the commune, guys, it's a problem, commune. So we are moving all along to fourth. We are moving all along to fourth track, right? So did we have any information about the fourth track? Yes, according to our additional information 2 here, we sold, we donated, not sell. We donated, okay, we donated a fourth truck on the 30th of December 2021. So what we have to do here, remember, when we donate, we have to recognize an assets, right? So we have to look out for the cost price of the assets. We have to look out for the accumulated depreciation of that assets. Then write them off out of the book of the business. So let's do that. So this asset, it was purchased when on the 1st of March 2017. Then it has the useful life of 7 years. Sorry. So here it's years, guys. It's years. It's years. Here. It's years. Right. Sorry for that. So let's check according to our depreciation method. Which method are we supposed to use for the Ford? It says Ford, Nissan, and Mazda Bong truck are depreciated using the straight line method. Simple stuff. So this is the bonus. If this is straight line method, it's a bonus. So let's check the cost price of the Ford here. So the cost price of the Ford, it was 1,900,000. Then it have the residual value of 190,000. So now we will calculate the depreciation of Ford. Let me just say it's Ford here, right? So this is Ford, right? So we will calculate the depreciation for 2017 to 2018, right? I want to do it the long way so that you guys cannot be confused, right? Okay, let me just press this information here and reference the first one, right? So what was the cost of the Ford? The cost, it was 1,900,000. Okay, let me just combine it so that Excel can do the calculations for me. So okay, let me just leave it like that. Then my residual value is how much? So my residual value was 190,000. Okay, so my residual value it was my residual value is equals to 190,000. Let me just confirm that again. Yes, it's 190,000. It's 190,000. Did I wrote that? It's 190,000. Then you have the useful life of 7 years. Then you're required to use the straight line method. So what will be our calculations? So because of you are required to use the straight line method is very simple. We take our cost price, subtract by our residual value, then we'll get our depreciable amount, then our depreciable amount multiply by the month the asset was used, then divide by the useful life. But if the assets it was bought at the beginning of the of the year, then it will be 12. It was used for the whole 12 months. Then there will be no need to apportion, right? So let's go to our calculations. So it will be 1,900,000. Then we will have to subtract it. So I'm sorry. So okay, let me just do it like this. Subtract by 190,000. Then it will give me my depreciable amount of yep, this will be my depreciable amount. This will be my depreciable amount, right? Okay. Let me just remove the equal sign here. So this will be my depreciable amount. So guys, please follow me because of I can't write the equal sign here. So it ruin everything here if I put equal sign here. So we will have to divide this depreciable amount. So let me just write it. This is my depreciable amount so that you guys cannot be confused. So this is my depreciable amount. Then my depreciable amount I have to divide it with the useful life, right? So it will be my depreciable amount I have to divide it with my useful life, right? So I will come across my depreciation for the current financial year of 2017 to 2018 as 244,286. Let's just convert that amount. 286. So this will be my depreciation. So because of nothing happened within this current financial of 2018 to 2019, 2019 to 2020, 2020 to 2021, then my depreciation from 2018 to 2022, it will be the same, right? So let's just drag it down. So this will be my depreciation, right? So my depreciable amount, it will also be the same. Oh, Excel, it's performing the calculation now. So I will just like correct it. Okay, here we go. Okay, nope, not for 2021. Okay, let's erase for 2021 because of that's where we sold, right? Okay, so let's go to additional information. For more information about this asset that was disposed or that was donated, it says on the 30th of December 2021, MTP2I Ltd donated their fourth truck to mail local delivery after one of their truck was bent during looting while they were delivering one of their clients' goods. So let's go back to our financial year. Remember, this asset, it was donated on the 30th of December. So meaning it was used let's go back to our financial year. So this assets here, it was used on March, April, May. It was used March, April, May, June, July, August, September, October, November, and for the whole month of December. Why? Because of these assets, they started to donate it on the 30th of December. So meaning this assets, it was used for the whole month of December. So it was used from March, April, May, June, July, August, September, October, up until November. So for the mere fact that it was used within the current financial of 2021 to 2022 for a certain period of months, then we have to calculate its depreciation only for the month that it was used, right? So I will come across 10 months as my the month that the asset was used within the current financial of 2021 to 2022. So my cost, it would be the same. Then my residual value, it would be the same. Then my depreciable amount, it would be the same. But the depreciation, it would be something else. Let me just say, track down the depreciable amount. So for me to calculate, so let me just put 10 month here. Okay, so within the current financial of 2021 to 2022, this asset, it was only for 10 months. So we have to show the depreciation for only the period of 12 months. That's whereby we have to apportion, right? So what I have to do here is to take my depreciable sorry for a cut off, guys. Sorry for a cut offs. So let's calculate the depreciation for 2021 to 2022, right? So my cost price will be still the same. Then my residual value, it will be the same. My depreciable amount, it will be the same. Then let me just track down my depreciable amount here. So what we have to do here, guys? What we have to do? So what happened here? Okay, Excel decided to perform the calculation. So let's erase here because of the depreciation, it was the same. So let me just drag it down again. Okay, so now Excel is performing the calculation. So I'll just erase 5 and write 4. And here, let me just remove 6 and write 4. So applies to here. Let me just remove 7 and write 4. I hope you guys are not getting confused, right, when we are using Excel. So remember, the reason why my depreciation is constant here, it is because of these assets within the current financial of 2017 to 2018 up until 2020 to 2022, it was used for the whole period of 12 months, right? So the depreciation, it will be the same because of you're using a straight line method. So nothing happened within the current financial of 2017 up until 2021. Nothing happened about these assets, but the things started to change when it comes to the current financial of 2021 to 2022. What happened during the current financial of 2021 to 2022? This is what happened according to our additional information. No. According to additional information 2, this is what happened about that assets for truck. What happened about this for truck? We decided to donate this truck on the 30th of December 2021. So the depreciation it have been constant here from 2017 up until 2021. But things change when it comes to the current financial of 2021 to 2022. We did what? We decided to donate these assets. So we have to recognize that assets. Why? Because of it was donated when it comes to the current financial of 2021 to 2022. And these assets within the current financial of 2021 to 2022, it was not used for the whole 12 month. Right? This asset it was not used for the whole period of 12 months. It was used from the 1st of March up until December. That's when we decided to dispose these assets or donate these assets. So if you want to calculate the depreciation within the current financial of 2021 to 2022, we have to apportion, right? We have to apportion, right? So remember, 286. This is our depreciation for the whole period of 12 months, right? So this is our depreciation for the whole period of 12 months. But now we are looking out only for the depreciation from March up until December. So how many months did we use these assets for this current financial of 2021 to 2022? It's March, April, May, June, July, August, September up until December. So how many months? 2, 3, 4, 5, 6, 7, 8, 9, 10. It's 10 months. So for us to get the depreciation for 2021 to 2022, we'll just like take this depreciation, then we have to multiply it by 10, then we divide it by 12 to get our depreciation for the current financial year of 2021 to 2022, right? So Excel, it's not giving me the correct amount, so let me just plot this amount close. I'm sorry for the background noise, guys. This guy is busy making noise here. Then multiply by 10, divide by 12. So this will be our depreciation for the current financial of 2021 to 2022. Let's just like convert it. If you convert it, it will be 203 57572. Then we are done with a fourth, right? So guys, let's just like take a quick break because of I don't like this background noise, so it will mess up everything. So let me just take a quick break, then I will be back. I want to hear whether this background noise it is that much, so that I cannot continue with something that will have a lot of noise and confuse you guys and mess up the whole video. So let me just like take a quick break to hear the recording whether the background noise is too much or not. If it's too much, then I will pause and proceed when the guy decided to cool up. So quick break, then we'll be back. Then when we come back, we are going to discuss we are going to continue with Tata Truck and Nissan. So this is the information for the summary of the truck. Then we have some additional information here. You can take a screenshot as long as we are taking a break. Then this is additional information, and try to attempt Tata Truck and also Nissan Truck depreciation, depreciable amount divided by the useful life of the assets, then multiply by we have to multiply by the month that the asset was used only within the current financial of 2021 to 2022. So this asset, it was sold on the 30th of December, right? So it was used from March up until December before it was sold, guys. So I hope it does make sense. You guys are not going to get confused, right? So Let's move all along to data track, guys, right? So let me just go to the word question here so that you guys can understand the question. I hope therefore it does make sense as a whole, right, guys? So now let's move all along to the data track, guys. So the data track, guys, we have the cost price of 1,790,000. Guys, we have the cost price of 1,790,000, but remember, when we did our analysis, we only found out that the cost price of 1,790,000, it's only the cost price of the assets excluding the trigger, right? So if you still get confused of that, just go back to the analysis so that you guys can understand what we have been discussing. But like then, let me just remind you guys. So remember, according to the policy of the business, all the assets they cannot operate without the installment of the trigger. Then we said if the installment of the trigger, if the trigger is not installed, therefore the assets cannot produce economic benefit. Hence, we have to add 10,000 from to 1,790,000 so that we can get the total cost of the truck as it is. So the trigger is a necessary cost. It forms part of the cost price of the data truck. Why? Because of without a trigger, these assets cannot produce what you call economic benefit. So therefore, it doesn't meet the criteria of some of the criteria of the assets, the definition of an asset. So we cannot regard it as an asset without the installment of the trigger. I hope it does make sense. So what happened about these assets here, guys? So for us to get the cost that we're going to use or record in our PPE note, we have to take 1,790,000, then add it with 10,000 so that we can get the total cost of the data truck. Then back to our information. Remember, the data truck, it was brought into use on the 1st of March 2017, but it was ready for use on the 3rd of August 2017. So now when we want to depreciate our assets, it has to start to depreciate from the 3rd of August 2017. So because of it was not used for the whole month of August, therefore it has to start to depreciate from the 1st of September 2017. Why 30th of September? Why the 1st of September 2017? Why? Because of that's where better assets was ready for use. It was ready for use within the current financial of that on the 30th of August 2017, but because of it was not used for the whole year, for the whole month of August, because of it was only like ready for use on the 30th of August. Already the month it's over, so it will start to be used on the 1st of September. So it have to depreciate from the 1st of September, not by the day it was brought to use. Why? Because of it didn't meet the definition of the assets on the 1st of March 2017, but it started to meet the definition of an asset on the 3rd of August 2017 after we have installed the trigger. I hope it does make sense. So let me just take you guys through to the calculation. Before you go to the calculation, let's check which method I recommended to use to depreciate this data track. It says the data track is depreciated using the diminishing balance method with the rate of 10%. Here, guys, we are not required to use the useful life method like the instruction says. It says use the rate method, not the useful life method. Remember, the useful life method, guys, we only use the useful life method if you know when the assets was purchased. So in this case, we can use the useful life method, but the instruction will clear that we have to use the rate method, guys, right? So the useful life method, that's whereby we depreciate the assets according to the remaining useful life. So now we know that our assets, now it have to start to depreciate from the 1st of September, then using the diminishing balance method. So let's go to our calculation. So here, guys, this is 1,800,000, which is the total cost of the truck. So what we have to do here is to perform our calculation. Remember, we have to use our diminishing balance method. Then our diminishing balance method, it says cost subtract by accumulated depreciation. So in this case here, for the current financial of 2017 to 2018, we don't have any accumulated depreciation for this assets. Why? Because of the definition of a diminishing of accumulated depreciation. The definition of accumulated depreciation, it's actually the value that the assets have lost since they have been operating up until the current financial year that we are in now. But because of this assets, it was new or within the current financial of 2017 to 2018, it does not have a depreciation or accumulated depreciation. So it's the same as saying cost subtract by 0, which is which will give you the same amount as cost. So we will take the cost as it is, then we multiply by the rate of 10%, then we have to apportion. Let's check how many months did we use this asset within the current financial of 2017 to 2018. So the assets, it was ready for use on the 3rd of August, so therefore it will start to operate well on the 1st of September. So how many months this assets was used within the current financial of 2017 to 2018 in September up until February? So how many months do we have them? It's 2, 4, 6. It's 6 months, right, guys? So we have to multiply by 6 months here, guys. So it's gonna be multiplied by 6, divide multiply by 6, divide by 12. Then we'll come across our depreciation. Let me just do my calculation here. So it's gonna be 1,800,000 multiplied by 10%, then multiply by 6/12. Then here we go. This will be my depreciation for the month of for the current financial of 2017 to 2018. So let me just confirm that so that we cannot continue using the wrong amount. Then multiply by 10%, then multiply by 6/12. Here we go. I come across my depreciation as 90,000. So let me just confirm the month whether I have calculated the month correctly. So it's September 1, October 2, then November 3, 4, 5, 6. Yeah, it's definitely 6 months. 1, 2. I don't want to make mistake, guys. Sorry for that one. Yep, guys. So it's exactly 6 months. I've just confirmed it using the calculator. It's actually 90,000. Our depreciation, it's actually 90,000, right, guys? So this will be my depreciation. This will be my depreciation for the current financial of 2017 to 2018. So now let's calculate our accumulated depreciation. Accumulated depreciation at the end. Remember, what's the formula for accumulated depreciation at the end? We have to take our accumulated depreciation at the beginning plus our current depreciation. It will give us accumulated depreciation at the end for that particular financial year we're focusing on. So now because of we don't have accumulated depreciation at the beginning, so my accumulated depreciation at the end, it will be the same as my accumulated depreciation at the end, it will be the same as my depreciation. Why? Is because of it's the same as 0 plus 90,000. I hope it does make sense. So this accumulated depreciation at the end, when you move to the next current financial of 2018 to 2019, it will be regarded as accumulated depreciation at the beginning for the current financial of 2018 to 2019. Right, guys? So now because of we have our accumulated depreciation at the beginning for the current financial of 2018 to 2019, then we can apply the diminishing balance method. Right, guys? So it's 1,800,000. Then I have to subtract by my accumulated depreciation at the beginning of 90,000. Then it will give me my depreciable amount of everything. I do it with calculator. So okay, then it's 1 million. Then I subtract it by 90,000. Then I come across my depreciable amount of my carrying value of 1,710,000. And I have to multiply it with the rate of 10%. Then multiply by 12/12. Why? Because of within the current financial year of 2018 to 2019, it was used for the whole month. So let me just perform the calculation here. So guys, I'm sure I'm gonna just like be a little bit slow because of I have to show my calculation, right? So if like I was only performing Excel without writing the calculation, everything would be easy, but like then I have to take you guys to the calculation, show my calculation so that you guys cannot be confused. So for me to get my depreciation for the 2018 to 2019, I have to take my carrying value at the beginning, which is 1,710,000. Sorry, 710,000. Then I have to multiply it with the rate of 10%. Then multiply it by 12 or over 12. Here we go. Then I will come across my depreciation as 171,000, right? So this will be my depreciation. Then for me to get my accumulated depreciation at the end within the current financial of 2018 to 2017, I have to take my accumulated depreciation at the beginning, which is 90,000, right? 90. Let me just write it. Accumulated depreciation at the end, specifically within the current financial of 2018 to 2019, right, guys? So it will be my is equals to my accumulated depreciation at the beginning of 90,000. Then I add it with my current depreciation of 171,000. Then I will come across my I will come across my accumulated depreciation at the end. That's how much it's equals to 90,000. I add it with 171,000. So this will be my accumulated depreciation at the end. Let me just confirm that I don't want to do mistake. Yep, it's 261,000. So this 161,000, it's my accumulated depreciation at the end within the current financial of 2018 to 2019, which will be the accumulated depreciation at the beginning within the current financial of 2019 to 2020. Right, guys? So remember, when I apply my diminishing balance method, I have to take my cost price, subtract by accumulated depreciation. What will be my accumulated depreciation that I have to subtract it from the cost? For me to apply my diminishing balance method, it's my previous accumulated depreciation at the end. This previous accumulated depreciation at the end, when it comes to the current financial of 2019 to 2020, it will be regarded as my accumulated depreciation. So 261,000, it will be my accumulated depreciation at the beginning within the current financial of 2019 to 2020, but it was accumulated depreciation at the end for the current financial of 2018 to 2019. I hope it does make sense. So it's 1,800,000. I have to subtract it with 261,000. Then I will come across my carrying amount as subtract 261. Then I come across my my carrying value as 1,539,000. Then I have to multiply it with the rate of 10%. 10%. Then I have to multiply with 12 over 12. Why? Because of it was used for the whole year within the current financial year of 2019 to 2020. Then for me to come across my depreciation for this current financial year, I have to take my carrying amount of 1,539,000. Then I have to multiply it with the rate of 10%. Then I multiply it with 12 over 12. Yep. Then this will be my depreciation for the current financial of 2019 to 2020. Then for me to get my accumulated depreciation at the end here, for the current financial year of 2019 to 2020, I have to add my accumulated depreciation at the beginning, which is 261,000. 261,000, then plus my current depreciation of 153,900. Then let's get our total. How much would be my total? My total, it will be, let me just do my calculation here. Then my accumulated depreciation at the end, it's 414,900. So it will be my accumulated depreciation at the beginning within the current financial of 2020 to 2021. I hope it does make sense, guys. I hope it does make sense. So make sense out of it so that you guys can understand how do we go with diminishing balance method, because of it confuse a lot of student. So it's my cost price, subtract my accumulated depreciation at the beginning of 114,900. Then it will give me my depreciable amount of okay, subtract by 1. Then I come across my depreciable amount as 100 and not 100 but 385,100. Then I have to multiply by the rate of 10%. Then multiply by 12 over 12. Why? Because of it was used for the whole year within that particular current financial year. So if I do my calculation, I will take my carrying value of 1,385,100, then multiply by the rate of 10%, then multiply by 12 over 12. There we go. Then I'll come across my depreciation as 138,510 for the current financial of 2022-2021. Then for me to get my accumulated depreciation at the end for this current financial year, it will be how much? Okay, it will be my accumulated depreciation at the beginning, which is 114,900. Then what is Excel doing now? Okay, sorry for that. Let me just okay. Sorry for that. So accumulated depreciation at the end, it's 414,900. Then I have to add it with my current depreciation of 138,510. Still have a lot to do. Then I'll come across my accumulated depreciation at the end is how much. Let me just perform my calculation here. Here we go. This will be my accumulated depreciation at the end for the current financial of 2020 to 2021, which will be accumulated depreciation at the beginning for the current financial of 2021 to 2022. So with me applying my diminishing balance method, my cost as constant as it is, then I will have to subtract it by my accumulated depreciation at the end, at the beginning actually, which is my accumulated depreciation at the end from the previous year, right? So it's gonna be 553,410. Then it will give me the total amount of how much. Let me just perform my calculation manually. Then it gave me my carrying value at the beginning as 1,246,590. Then I have to multiply it with my rate of 10%. Then multiply by how many months? Then we don't know by how many months, right? Why? Because of it's exactly within the current financial year of 2021 to 2022, whereby we disposed an asset. So let's go back to our information to check by how many months are we supposed to apportion with, right? So if you go to our additional information, it says on the 1st of September, 2021, MTPTY Ltd sold Tata truck for cash to the local supplier. So exactly on the 1st of September 2021, that's whereby we sold this Tata truck. So let's go back to our financial year and see what's going on here. Okay, so immediately when it comes to the 1st of September, that's whereby we started to dispose our assets. So this assets, it was not used for the whole month of September, but immediately when the month start, we decided to dispose these assets. So we can all agree that this asset, it was used only from March up until August. It was used only from March up until August. So we only have to depreciate it for those 13 months that was used for that current particular year. Right, so it's March up until August. How many months do we have? It's 1, 2, 3, 4, 5, 6. So it's 6 months. So within the current financial of 2021 to 2022, before these assets were disposed, it was used for the period of 6 months. Right, guys? So let's get our total depreciation and check how much is it. So it's gonna be is equals to 1,246,000 590, then multiplied by 10%. Oh, sorry for the lesson. Then multiply by 10%. Then we have to multiply by 6 over 12. 6 over 12. Here we go. Then this will be my depreciation for the current financial year of 2021 to 2022. Let me just confirm that. I'm sorry, I'm just gonna be a little bit slow to avoid making errors, because when it comes to calculation, that's whereby we make a lot of errors. Yep, so it's 263,209. So let's convert this one. So if I convert this one, it's gonna give me the value of 62,000 330. Then this will be my depreciation. This is going to be my depreciation. This is going to be my depreciation for the current financial year of 2021 to 2022. Then let's go get our accumulated depreciation at the end, right? Accumulated depreciation at the end. Okay, so my accumulated depreciation at the end, it will be how much? I'll have to take my accumulated depreciation at the beginning, right, guys? So I will have to take my accumulated depreciation at the beginning plus my current depreciation of 62,330 after converting the amount. Then this will be my accumulated depreciation at the end for the Tata truck. So now let's move on along to the Nissan truck. So here we're just like performing the calculation. After performing the calculation, that's whereby we are going to do the required. You see how long is it, guys? Just to perform the calculation, it's very long. So let's move all along to other assets. So let's check up to so far how many assets are we left with according to our information. Okay, we are done with Tata truck. Then let's move to Nissan truck. So according to our additional information, did you had any information that tells us more about Nissan truck? No, we didn't have any information that tells us about Nissan truck, because of this one it was telling us about a Tata truck. Then another one, it told us about the Ford truck. We already covered that. So nothing happened within the current financial year of 2021 to 2022 about this particular assets Nissan truck, right? So the Nissan truck, its cost price is 3 million, and then its residual value is 3,000. Then it was bought on the 1st of March 2017. Then the useful life of it was 7 years. So let's check which method are we required to use to depreciate our Nissan truck? It says Nissan, Manda, and so on and so forth are depreciated using the straight line method. So very simple and quick one. So we will use our straight line method to depreciate Nissan. So it's Nissan. Then let me just copy this information here. So because nothing happened within the current financial of 2021 to 2022 about the Nissan truck, therefore my depreciation from 2017 to 2022, it will be the same for Nissan, right? So I'm just like going to take a long road so that you guys can understand that, right? So we have the cost, right, of Nissan as 3 million. Then we have our residual value of Nissan as 3,000. Let me just confirm the amount to avoid making mistakes. Just confirming the amount. Yes, it's 3 million. Yes, the residual value is 3,000. Then let's continue with our calculations. Yes, it's 3 million. Then this is 3,000. Then if you're required to use a straight line method, remember the formula for straight line method, we take our cost, then we have to subtract it by our residual value. In this case, our residual value is 3,000. Then it will give us our depreciable amount of how much? I'm getting the depreciable amount of 2,997,000. Then I have to divide it with the useful life of 7 years. Because of the useful life, it was 7 years. Then I will come across my depreciation for the current financial year as how much. I get my depreciation for the current financial year as 428,000. It's 428,143 if I convert it. If I convert it, it's 428,143. Yep, guys. So this is how we go about using straight line method for this particular assets in Nissan truck. Right. So let me just confirm the useful life, whether it's 7 years as it is, to avoid making mistakes, and erase again. Yes, it's 7 years. All right, guys. So Nissan, it was very simple. It was very simple one. So the same depreciation here, the same depreciation, it will be the same depreciation here. It will be the same, guys, right? So the depreciation of 2017 to 2018, it will be the same up until 2022. So let me just try it down. Oh, Excel decided to perform the calculation. Okay, let me just erase it. Okay, guys. Guys, like I just wrote the calculation. I thought this thing is recording. Only to be aware that it was not recording. I'm sorry for that, guys. But like then I will take you guys through to the calculation. So as we are done with the Tata track, I'm sorry for that. I thought it's recording. So guys, this is the calculation of Tata track. This is whereby we ended. So now we are moving all along to the Nissan truck. Yeah. So what happened about this Nissan truck? We go to our Nissan truck. What happened with our Nissan truck? So we have a Nissan truck. A Nissan truck, it was purchased on the 1st of March 2017. Then it have the cost price of 3 million. Then it has the residual value of 3,000 and the useful life of 7,000. So now let's go to our additional information. Do we have any information that us about something about Nissan truck? No, we don't have anything about Nissan truck. So meaning there was no any movement within the current financial year of 2021 to 2022 about this Nissan truck, right, guys? So nothing happened about this Nissan truck within the current financial of 2021 to 2022. So according to our information here, we are required to use the straight line method to depreciate the Nissan truck, right? So the straight line method, we take our cost, subtract by our residual value, then we get our depreciable amount divided by the useful life, then multiply by 12 over 12. So when we start with our first current financial of 2017 to 2021, because of Nissan, it was bought on the 1st of March 2017 within the current financial of 2017 to 2018. Then it was used for the whole current financial year. So we'll take our cost, subtract by our residual value, then it will give us our depreciable amount, divide by 7, then it will give us our depreciation for 2018 as 428,143. So because of nothing happened about this particular assets within the current financial of 2021 to 2022, then my depreciation is constant. So my depreciation from the current financial of 2017 to 2018, it will be the same up until the current financial of 2021 to 2022. I hope it does make sense and I'm not confusing anyone. So because of we are done with the Nissan truck, let's check any additional assets that we have to depreciate. Any additional assets that we have to depreciate. So for our first summary here of the assets, we don't have anything about any truck. So we are done with our table. So let's check according to our additional information whether did we purchase any assets within the current financial year of 2020. Within the current financial of 2021 to 2022. It says on the 1st of September 2021, MTP2 Ltd sold the truck for cash to the local supplier, a JJ Transporter, with a selling price of 1,234,125. The new Mazda Pong truck with the cost price of 1,200,000, including the trigger, was ordered and brought into use on the same day with the useful life of 5 years and with the residual value of nil. So guys, the cost price of 1,200,000, it already includes the trigger. So the necessary cost, it was added on the cost price of 1,200,000, guys, right? So what you have to do here, it's only to apportion or to depreciate this amount according to the month it was used within the current financial of 2021 to 2022, meaning it will start to depreciate from the 1st of September 2021 up until 28 of February 2022, right? So according to our information, for new Mazda Pong truck, we were supposed to depreciate it using the straight line method. So guys, it's very straightforward. So let's go to our calculation. Let me take you to my calculation. While I did the calculation and I thought the session is recording and it's not recorded. So let me just take you guys to the calculation. So what I did in my calculation, just like before my calculation for the current financial of 2021 to 2022. So I just took my cost, divide by the useful life. Then I will get my depreciable amount of 240,000. Then I had to apportion it according to the month it was used for the current financial year. So it was started to be used on the 1st of September. So if I go to my financial year, I only found out it was used for the period of 6 months. It's September, October, November, December, January, February. Right, guys? So it gave me 6 months as a whole. So these assets, the Mazda, it was used for the whole period of 6 months within the current financial of 2021 to 2022. So guys, I'm just gonna take a quick break, then I will take you guys to the calculation of the calculation, actually not the calculation, but now we are going to do our required after a short break. we'll be doing the required, guys. So please bear with us. I will be back to do the required, but now because of we have already did our calculation, when it comes to the required, we're just going to transpose the amount, but using the principle. So I'm just like going to explain to you guys how are we supposed to generalize so that you guys cannot lose marks. So a quick break, then we are going to do our required, generalized. After generalizing, then after generalizing, we'll be doing our PPE note, then we close the session. Okay, guys, a quick break, then we'll be back. Cheers. Okay, guys, so now we'll be moving all along to the required. So we'll be moving all along to the required, guys. So according to our required, I'm sure you guys have been asking yourself so many questions. Why do you guys see a lot of information changed here? The question, it's actually the same, but like then I've been using a different document. Some of the document that they are highlighted, this is actually the document that we have been analyzing, right? But like then I've just changed the years here because of the document that I've been using. It was 8. Yeah, it was 7. Then according to this one, it was 8, but that doesn't matter. We'll still proceed with 7. So let's check our required. What are we required to do? We are required to prepare general entries, actually necessary general entries. So guys, please, if you are required to prepare necessary general entries, like the question, it's not specific whether you should prepare the general entries for the depreciation or for anything. Please, if you're required to prepare general entries, please generalize whatever you think you have to generalize. Everything that comes to your mind, okay? If you think I have to generalize this, generalize it. Because if you don't know what you're required, like specifically which general entry are you required to do. So please generalize everything that you think you have to generalize, but then please like make sense out of it. The generals, like we only prepare the generals according to what happened during the current financial year, only the movement of the current financial year. We don't take into consideration maybe something that happened 5 years ago or something that happened last year, like this cost price here, like this cost price of this vehicle. Please, you cannot like generalize this cost price of last year, why of 2017. Why? Because of they were already generalized within the current financial of 2017 to 2018. So general entries, they are specifically for what happened within the current financial year that you are in. Nothing much, nothing less. Only everything that happened within the current financial year that we are in. So please don't generalize something that is unnecessary, like generalizing 2017's amount or accounting entries while we are busy focusing on the current financial of 2021 to 2022. So please, guys, don't do that. Only generalize the movement of the current financial year. Everything that happened during this current financial year actually will be guided by your additional information, or your additional information, it represents all the movements that happened during the current financial year, right? So you will generalize according to your additional information. But remember, when it comes to depreciation, once an asset is ready for use, it will have to depreciate each and every year, even though we bought these assets within the current financial of 2017. But when we are going to do the general entries of 2022, for the mere fact that it was ready for use on the previous year, or it was used and it was used or actually during this current financial year too, so we have to show the general entries only for the depreciation of it, but not the cost price of it. The cost price of that we're going to recognize only is the cost price of the assets that we bought during this current financial year, and the cost price that we have to recognize, it's actually the cost price of the assets that were disposed. So this is what we are going to focus on. We are just going to focus on the disposal or on a derecognition and recognition of the assets that we bought during the current financial year, and also the depreciation of all the assets, including the assets that you have previously bought, the assets that were not bought during this current financial year. We have to generalize its depreciation. Please, very important. So like I said, guys, we depreciate or generalize actually according to the dates. If It says generalize all the necessary entries. They are not specific like my question here. My question is not specific. It says prepare the general entries for the year ended 28 February. You like you don't know what is required of you. So please prepare the general entries according to your dates. If the question is like this, right? Please prepare it according to your date. So let me just go to my general entries. We are going to prepare my general entries. I'm going to prepare my general entries here. So like I said, I'm going to prepare it according to the date. So let's check what happened the first date of the movement. So according to our additional information, our first movement was on the 1st of September 2021. What happened on the 1st of September 2021? I derecognized an asset. I sold an asset. I sold one of the Tata truck on the 1st of September 2021. Right? I sold one of the truck. So we have to derecognize. So what are the important general entries for the derecognition? When you start derecognizing an asset, guys, please listen very attentively. When you are going to derecognize an asset, when you go to your general entries, please start with the depreciation of that asset. So according to our additional information, data track was the one that was disposed on the 1st of September 2021. Then I prepare my journals. This is my journals, this is my debit, this is my credit. What happened on the 1st of September? I disposed. What do I start with? I start firstly by taking into account the depreciation of the assets. So the depreciation of the Tata truck that was disposed or that was sold, how much is it? We come across that our depreciation of the Tata truck is 62,330. I hope you guys still remember. It was the depreciation for within the current financial of 2021 to 2022. This will be our depreciation. Then the depreciation of it, we will just generalize it. Then we will debit our depreciation. The depreciation is an expense. It is recorded on the debit side. Then the counter account, it will be accumulated depreciation. After depreciating your assets, after the recognition, what you have to do, there are these three major accounts that are affected after the depreciation. It's a derecognition. Derecognition, it's accumulated depreciation, and the cost account of that asset. If it's a vehicle, you write the vehicle. If it's equipment, it's equipment. But regardless of whether it's an equipment or what, this accumulated depreciation and the derecognition, you have to write it as it is. It's a derecognition, it's accumulated depreciation, regardless of whether we dispose in an equipment or what. But these two one, they are always like this. If we derecognize, only this one that will change. It will be a vehicle. If we dispose in a vehicle, it will be an equipment. If you dispose in an equipment. So what's going to happen in these major accounts? For the mere fact that we are derecognizing, remember, a vehicle account or a cost price account of a vehicle is an assets account. Whenever we're going to purchase, it's going to increase on the debit side. Whenever we are going to sell, it have to decrease on the credit side. So now, because of taking it out of the book of the business, we have to show the effects on the credit side because of by the time we bought it on the 1st of March 2017, we recognize it on the debit side. We're saying, okay, our vehicle account is going to increase on the debit side because of we bought a certain vehicle with the cost of this much. So now, because of you are going to derecognize it or writing off out of the corporate business, we have to show the effects on the credit side that we are no longer having these assets. We are taking it out of the book of the business. So if you guys still remember, my cost price for the Tata truck, it was how much? My cost price for Tata truck, it was 1,800,000. So I'm going to write 1,800,000 here on my credit side of vehicle. I hope we are still on the same page. So guys, please, this is the general entries for the Tata truck. So this is the general entries for the Tata truck. Guys, please don't be confused. We are derecognizing a Tata truck right about here. So I will try to be a little bit slow so that you guys can follow and not miss everything. So now we are moving all along to accumulated depreciation. Remember, accumulated depreciation, it increases on the credit side, then decreases on the debit side. So whenever we are going to depreciate an asset, check this. Whenever you're going to depreciate an asset, our accumulated depreciation account, it increases where? It increases on the credit side. So accumulated depreciation account is a cumulative account. It's a cumulative account. It's actually a summary of all the depreciation from the date the assets started to depreciate to the date you will be selling it, or from the current financial year that you are in. I hope it's clear. Accumulated depreciation account is a summary of all the depreciation from the date this asset started to depreciate to the date you'll be selling the assets, or from the current financial year that you'll be focusing in. It will include all the depreciation from the date of purchase to the current financial year that you are in. So it gives you the summary of all the depreciation of assets. So now, because of we are derecognizing, so whenever we're going to depreciate an asset, we are going to have what? Here, check this. Here's our depreciation. Here's our depreciation? It was debited. What was counter account of the depreciation? The counter account of depreciation, it was accumulated depreciation account. So meaning this amount, it have to be recorded where? It have to be recorded in accumulated depreciation account where? On the credit side. So now, because of we are derecognizing an asset, we have to add all the depreciation from the date the assets started to depreciate up until the date we recognize an asset, and show the effect on the credit side that we have been recording this on the credit side. It have been increasing this depreciation. It have been increasing. On the credit side of accumulated depreciation account. But now, because of we are recognizing it, we have to show it on the debit side that, okay, we have to show it on the debit side of accumulated depreciation account that now we are taking it out of the business. We are now taking out what we have been recording on the credit side. We are taking it out of the book of the business. So now if we're going to take it out, we have to show the effect on the debit side of it so that you can cancel whatever you have been recording on the credit side. Remember, when it depreciate every time, each and every year, when we are going to calculate the depreciation, accumulated depreciation account is have been created, it have been created, it have been created. So now, because of we are derecognizing an assets, we have to show the effects on the debit side to cancel what we have previously been recording on the credit side of it. I hope it does make sense. If it doesn't make sense, you guys are more than welcome to text me for more information with regard to this. So now we are going to come here in accumulated depreciation. We are going to come with accumulated depreciation at the end for the Tata truck. Accumulated depreciation at the end for Tata truck. Let's go check our information. So here it's our Tata truck. We have our accumulated depreciation at the end here. Remember, the accumulated depreciation at the end, it consists of accumulated depreciation at the beginning, accumulated depreciation at the beginning plus my current depreciation. That's how I come across my accumulated depreciation at the end. So this accumulated depreciation at the end here, I'm just going to copy it and paste it. Where am I supposed to record it? Here on the debit side to cancel what I've been previously recording about this asset. So me, by doing this, guys, already I automatically cancel what I have been recording about this accumulated depreciation, or about this Tata truck as a depreciation. So now I have recognized accumulated depreciation. I have recognized the cost. I have recognized accumulated depreciation. Then now let's check the value that the assets have lost. So for me to check the value that the assets have lost, which is a derecognition that is recorded on the SPL, it's more like a carrying value, guys. We're going to take this cost price, then subtract it by accumulated depreciation. It's this price of 1,800,000, then subtract by the accumulated depreciation of 615,740 to get my derecognition. Then I have to generalize it. I have to generalize it as a derecognition SPR. Then this amount, it will also be recorded in statements of profit or loss under your expenses, guys. Right. So I come across the amount of 184,260. Okay, that's what I have to do, guys. So we are done with this part of the derecognition. So we are done with this part of a derecognition, guys. So what's going to happen again? So now, because of your generalized depreciation, and now we are done with the measure three accounts of the, which is the recognition, accumulated depreciation, and the vehicle. Now let's check whether did we donate it in an asset or we dispose it. If we have disposed it or sold it, let's check the selling price. Let's check the selling price. We have to generalize now the selling price. So it was sold with the selling price of 1,234,124. That's the selling price, right? So this selling price, guys, this selling price is going to increase our bank account. Our bank account is going to increase with this selling price. Statements of financial position. Statements of financial position. It's how much. So my bank account is an assets account. It increases on the debit side, guys. So it doesn't want to pass. Okay. Let's just leave it as it is. So it's 1,234,000, 1,234,225. So let's just like write it down so that Excel cannot act up like the way it's doing. So it's 1,234,125. So where does this 1,234,125 comes from? It comes from my disposal. That's how we prepare. So disposal, we can reference it as SFP. Right, guys? So now, because of we already take into consideration our selling price. So what we have to check here is to check whether we generated a profit or loss on sale of an asset, right? So how are we going to identify whether we made a profit or loss on sale of an asset? Very important or good question. You have to you have to compare your selling price with your carrying value. Remember, what do you mean when you're talking about carrying value? When you're talking about carrying value, we're talking about the worthness of the assets. This is how much this asset's worth. So in case whereby you want to sell your assets with its carrying value, therefore, in that case, you are not generating any profit, you are not generating any loss. Why? Because of you sold it with the value it worth. But in case whereby you're going to sell your assets with a higher price than your carrying value, then you're going to make a profit. The difference, it will be profit. But if you're going to sell your assets with the lesser value than it worth, or with the lesser value than your carrying value, then you're going to make a loss. So what is my carrying value in this case? My carrying value is actually more like a derecognition. So this derecognition actually here, it's my carrying value. Why am I saying it's carrying value? Because of for us to get this derecognition amount, we took our cost price, subtracted by our accumulated depreciation at the end, which give us the derecognition. Same applies as our carrying value. Remember, for us to get our carrying value, we take our cost, subtract by our accumulated depreciation, then it will give us our carrying value. So in this case, my carrying value, it is 1,184,260. So in case if I want to sell my Tata truck, I have to dispose it with this value. Then if I dispose it with this value, in this case, I'm not generating any profit or loss. But if I sell it with the higher value than this one, then the difference, it will be regarded as profit. But if I sell it with the lesser value than this one, then I'm going to generate a loss. So let's check what's happening here. It worth this much, it worth 1,184,260, but I dispose it with 1,234,125. As we can all see, my selling price is higher than my carrying value. So mean the difference, it's profit. It worth 1,184,260, but I dispose it with the value of 1,234,125. So the difference, it will be a profit on sale of an asset, right? So how much it will be my profit? My profit, it will be, okay, let me just write the entries that are going to be affected. So the first entry that is going to be affected, it's my disposal. It comes from my disposal account. It comes from my disposal account. Then the other one that's going to be affected, it's profit. Profit on sale of assets, right? So profit on sale of an assets, it's actually an income, so it's recorded under statements of profit or loss. On other incomes there, guys, you will regard it as profit on sale of an assets, and the other income, you will record that amount. So what will be my profit on sale of an asset? It will be the difference between my carrying value and my proceed from sale of an asset, or my selling price, right, guys? So let me just combine this amount so that Excel can perform calculations for me. So here we go. How are we going to get this one? We have to check the difference between this one and the carrying amount. Then here it's my profit, right, guys? So my profit, it's this much. That's my profit, guys. This is my profit on sale of an assets. Then this is the long process that you have to take when you have to recognize. You see how long it is, but if you understand your principle, how it works, then it will never be an issue or a problem to you guys, right? So guys, please try to practice or try to understand the principle of PPE, the principles of the disposal, so that you guys cannot struggle. So let me just like narrate here. It's a disposal. The disposal of species. Okay, guys. So now let's move. We are still continuing by preparing our general entries according to the dates. Still on the same date. What happened? Still on the same date. Still on the same date, we bought a Mazda Bong truck. Mazda Bong truck, right? With the cost price of 1,200,000. So now we have to recognize that assets, because of it was bought during the current financial year. Remember, I said to you, when it comes to general entries, we only focus on the movements of the current financial year that you're required to prepare your financial statements on. So because of these assets, it was bought during the current financial year of 2021 to 2022. Then we have to show the effects that we bought in a vehicle. So it's gonna be a vehicle with 1,200,000, 1,200,000. Then we'll have our bank account here. Our bank account, it will decrease, right? Then this is head recognition. Okay, let me just like not reference that one because of my PC acting up. Very Recognition. I'll just say Rick. Guys, you will. Um, so, guys, if you want memorandum of this question, feel free to text me. You guys have my numbers. I will drop my numbers on the description so that you guys can communicate with me and get everything that you need. So now we are done with the movements on the 1st of September. Then let's check the movement of another date. So we are moving on along to our additional information too. It says on the 30th of September, MTP2I Ltd donated their Ford truck to Melee local delivery after one of their truck was banned during routine while they were delivering one of their clients. So immediately we go to our general entries. We said on the 30th of December, there was some movements on the 3rd of December 2021. Please, guys, the dates are very important. If they were not specific on which general entries are you supposed to do, okay? Let me just increase. Okay, 30 December 2021. So what happened on the 1st of December 2021? We derecognized or we donated one of our Ford truck. Remember I said to you, when we derecognized we recognize if an asset it was donated, if the assets was sold, or if it's an asset was broke down, or if the assets have reached its useful life. And I said to you, when it comes to our general entries, what would be our first general entry if the asset was recognized? We said to you, you guys have to come up with your first general entry. It will be the depreciation. The depreciation, which each country account is accumulated depreciation. Then we will have three major accounts that are going to be affected, which is a derecognition, accumulated depreciation, and the cost account. It will either be equipment if you sold an equipment, it will either be a vehicle if you dispose in a vehicle. So now because of I'm dealing with the vehicles here, I will just copy the very same information and paste it here. I hope you guys are still following. Remember, the first general entries, it's your depreciation, then it's counter account, it will be accumulated depreciation, then three major accounts are going to be affected, the recognition, accumulated depreciation, and the vehicle. So now let's go to our, sorry for that. Okay, sorry for that. So now let's go to our calculations of for the track. Wait for it. Here we go. Here it's for. So what was the depreciation for Ford? Remember, this was our depreciation for Ford. So let's just like copy that depreciation and let's post it here. Okay, then this will be my depreciation amount. So Excel decided to perform the calculation for me. Excel, it's so jealous. Okay, let me just copy this one. Excel is too jealous, guys. There we go. There we go. I hope the background noise is not too much. People are singing here. Okay. So now we are going to our derecognition, accumulated depreciation, and the vehicle account. So we are going back still to our Ford trucks. What was our cost price for Ford truck? It was 1,900,000. So immediately we have to show the effect in our vehicle account, okay, to show that we recognize an assets of 1,900,000. Why on the credit side? Because of we recognized. This represents the credit side. Why? Because of we recognize. When we start buying the assets on the 1st of March, we record it on the debit side to recognize it, to show that I bought a Ford truck with the cost price of 1,900,000. I showed the effects on the debit side on the 1st of March 2017. But now, because of on the 3rd of December 2021, I have to recognize it. I have to cancel what I've previously recorded to show it as my derecognition. I hope we are still on the same page, guys, right? I've been talking. Okay, then this is Ford truck. So why is accumulated depreciation at the end for Ford truck? So this will be my accumulated depreciation at the end. My accumulated depreciation, my P it's not functioning. I'll P at the end. At the end. So it's gonna be my depreciation from 2017 up until 2021, guys, right? So what I'm just going to do here, I'm just going to take my depreciation of okay, Excel, it's not going to do the calculation, right? So because of Excel, it's not going to do the calculation. Let me just combine these amounts so that Excel can perform the calculation for me. And this one too. And this one too. Okay, here we go. So for me to get my total accumulated depreciation at the end, I'll take my first. Okay, I'll take this one, then add it by. Okay. 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 Okay, guys. So this will be my accumulated depreciation at the end. Let me just confirm that because of. Oh. Okay. Okay, guys. Let me just do it separately. So. So. Okay, guys. This will be my accumulated depreciation at the end for the Ford truck. Right, remember, accumulated depreciation at the end, it consists all the depreciation from the date it started to depreciate up until the current financial year. So this will be my accumulated depreciation at the end. I hope we are still following. I hope you're still on the same page. So this accumulated depreciation here, I will show the effects on the debit side, guys. Why? Because of each and every year we have been recording the depreciation way, accumulated depreciation way on the credit side. They have been increasing on the credit side. So we have been depreciating in assets, then its counter account, remember, it's accumulated depreciation. Then we have been depreciating or calculating its current each and every year. We have been calculating the depreciation on the credit side, credit side, credit side. So now, because of we have to recognize, we have to add all those depreciation that we have been recording on accumulated depreciation account and show the effects on the debit side to cancel what we have been previously crediting. Right, then I said to you guys, for you to come across the derecognition, you have to take out you have to take your cost, then subtract it by your accumulated depreciation at the end, then to get your derecognition here. So I'm gonna take my cost. Then I have to subtract it by accumulated depreciation. Then I will get my derecognition amount as 719,284. Right, this is the same as my carrying fee. So let's check whether what happened again with this one. So this asset, it was donated, so meaning we didn't sell the assets, therefore we will not have the selling price and everything. So meaning we will be not having we will not have profit or loss on sale of an assets, profit or loss on sale of an assets, and also will not have a selling price for this particular assets. Why? Because of you have donated it, we didn't receive something from what you have given. So it's a donation, we don't get something in return. So this will be the end of the recognition of what you call it is a Ford truck. Let me just show the reference here so that we cannot be confused. It's Ford truck, right, guys? Okay, so now we are done with the recognition part, right, guys? So now what would be our last general entries? Our last general entries, it would be our general entries at the end of the year. So when is our financial year ending? It's end on the 28th of Feb 20. Okay, let me just write it, Feb 2022, guys. So this will be my general entries for 28 Feb 2022, right, guys? So what do we record on at the end of the current financial year? Very important one. So guys, please, when it comes to this one, please, when it comes to this one, remember, an asset, it have to depreciate each and every year, regardless of whether when did we bought it. But for the mere fact that you have used these assets for the current financial year, it have to depreciate. So what we are going to record at the end of the current financial year, it's actually the depreciation of the assets that we had at the beginning. They're still there at the end. Internet difficulties. So guys, yep, let's continue. Okay. So I was telling you guys more about the general entries on the 28th of February 2022. So usually when it comes to the general entries of 28 February 2022, which is exactly at the end of the current financial year, we only take into consideration the depreciation of old and new. What do I mean when I talk about the depreciation of old and new? I'm talking about the depreciation. When I'm talking about the old, I'm talking about the depreciation of the assets that were there at the beginning. They're still there at the end of the current financial year. That's the depreciation of old. Then the depreciation of new is any additional asset depreciation that we bought during this current financial year. So all the assets that you bought during this current financial year, they are the one that you have to record its depreciation at the end of the current financial year on the 28th of February 2022. So here, guys, we're not going to include the depreciation of the assets that were sold. Why? Because of whenever we are going to recognize an asset, the first general entries that we start with is its depreciation. The depreciation of that particular assets that you have to recognize. Hence, we don't have to calculate, or hence we don't have to recognize or record the depreciation of the recognized assets on the 28th of February 2022. It would be a double accounting because of at the beginning, not actually at the beginning, but by the time we start to dispose an assets, we start first by taking it into account its depreciation, like we did here with this derecognition. Do you guys still remember? like the way we did with this depreciation. Let me just leave it there. It doesn't want to move. So, so guys, let me show you how did I come across this amount. Actually, I recorded it, but I then decided not to save, so I have to repeat it. So here, guys, we are going to take into consideration only the depreciation of old, right? Let's go to our additional information. So the depreciation of old, it's the depreciation of the assets that we had at the beginning. They are still there at the end. We can all agree that the Mercedes-Benz truck, it's actually the depreciation. That's actually the old assets. Why? Because of it was there at the beginning of the current financial year. It's still there at the end of the current financial year. Nothing happened about the Mercedes-Benz truck. Then moving all along to Tata truck and Ford truck. Remember, Ford and Tata truck, we disposed them or we derecognized them. So they were there at the beginning, but they were not there at the end. So we don't have to take into account its depreciation on the 28th of February 2022. Why? Because of they were not there. And we did take into consideration its depreciation by the time we derecognized them. The Nissan truck, nothing happened about the Nissan truck during the current financial year. So it will form part of the old assets. So we'll have to take into account the depreciation of Nissan truck. It was there at the beginning, it's still there at the end. Nothing happened about the Nissan truck. So we have to take that into consideration when we recognize the depreciation of the 28th of February 2022 or the depreciation at the end of the current financial year. Then when we go to our additional information, remember we disposed a new Mazda bomb truck, right? So at the time we started to buy a new Mazda truck, we started to buy it on the 1st of September 2021 after disposing the Tata truck. So this Mazda bomb truck, we have to also regard it as our new asset. So we have to show its depreciation on the 28th of February 2022. So let me take you guys to the calculation. So let me take you guys to the calculation. Let me just remove this video here. Disturbance. And let me just leave it because it's taking time. So this depreciation of old or depreciation of 28th of February 2022, it includes the depreciation of old and new. What is our depreciation? What is our old assets? It's the Mercedes-Benz. So we will take into account the depreciation of Mercedes-Benz and also the depreciation of Nissan and regard it as our old depreciation. Then the depreciation of Mazda. Let me just show you guys how did I come across that amount. So for me to get that amount there, I've taken my depreciation of Mazda, then I added it with the depreciation of Nissan, meaning 120,000 plus 428,143 plus my Mercedes-Benz truck. Where's Mercedes-Benz? This is my calculation for Mercedes-Benz, which is 135,000. Then all of it, when I add it, it will give me the amount of 683,143. Then that will be my depreciation. So guys, now we'll move all along to our required tool, whether we are required to prepare a PPE note. Guys, everything is in your calculations, but you have to know your principle, please. So I will try to go slow when it comes to PPE note. So here it's our PPE. Here it's our PPE note. So I'll try to go slow with you guys on how are we going to take into account the depreciation of, actually not the depreciation, I like depreciation, on how are we going to prepare this PPE note, right? So in our first part here, we have gross carrying amount, which is cost carrying amount, which is the same as cost price. Then we have accumulated depreciation at the beginning. Then we have carrying value at the beginning. Very important part. So our cost carrying amount at the beginning, we will only take into consideration the assets or the cost price of the assets that were there at the beginning. Which assets were there at the beginning when you go to our information? Which assets were there at the beginning of the current financial year? So the assets that were there at the beginning of the current financial year, it was Mercedes-Benz, Ford truck, and Nissan. But remember, the Tata truck cost of 1,790,000. it does not include the cost price of the tracker. So all in all, the cost price of a Tata truck, it's 1,800,000. So we are going to add all of this cost price to get the cost price of PPE at the beginning. So let's go to our we are going to take the cost price first of all. The cost price. Okay, let me just move with my arrow. Okay, we will take the cost price of Mercedes-Benz. Then we will add it with the cost price of Ford. What was the cost price of Ford? The cost price of Ford, it was okay guys, let me just write this cost price separate so that when I'm going to add them using Excel, it will give me the exact amount, right? So this is the cost price of Ford. Then we have the cost price of Tata truck. Let me just write it: 1,800,000. Then we're moving all along to the cost price of Nissan. Here is it. Then the cost price of Mazda, we are not going to take that into consideration. So it's Mercedes-Benz, 1 Ford, 1, 2 Tata truck, 3, then 4 with Nissan. So now let's calculate our cost price at the beginning. Our cost price at the beginning. Hey, my Excel. Okay, my cost price at the beginning. It would be Excel. Let's click up. Slow. So it will be my cost price of Mercedes-Benz plus the cost price of Ford plus the cost price of Tata truck. Remember, it includes the tracker cost, right? Plus the cost price of Nissan plus the cost price of, yeah, that's where it ends. It's the cost price of Nissan is the cost price of Nissan. Oh, okay, guys. Excellent, acting up. Okay, let me just try to do it again. If it's still acting up, then I will do it manually. So it's cost price of Mercedes-Benz, then the cost price of okay guys, to avoid making mistakes, right? Because of as you can see, this Excel, it's taking me to a lot. Let me just subtract everything. So we'll just go like this. The cost price of Mercedes-Benz was 5 million. Then I have to add with the cost price of Ford, which is 1,900,000. Then I have to add with the cost price of Tata truck, which is 1,800,000. Then I have to add with the cost of Nissan, which is 3 million. Then I come across the amount of 11 million So it's 11,700,000. 700,000. Then my accumulated depreciation at the beginning. Accumulated depreciation at the beginning. Please listen very attentively when it comes to this one, guys. My Excel, it's acting up, guys. My Excel, it's acting up. Screen is flashing now. So, guys, here when it comes to accumulated depreciation at the beginning, please listen to me very attentively. So, for me to get my accumulated depreciation at the beginning, guys, for Mercedes-Benz, I have to add all the depreciation from the financial year of 2017 to 2018 up until to the current financial of 2022-2021. Remember, all those depreciation, they will give me my accumulated depreciation for the current financial of 2021 to 2022. So accumulated depreciation at the beginning, it simply emphasized that it's all the accumulated depreciation or all the depreciation from the day it started to operate up until the current financial year before the current year. Up until the current financial year before the current financial year that we're focusing on, meaning it's our previous current financial year before we come to the current financial of 2021. So I have to add all the depreciation from the date the asset that it was ready for use or started to be used up until the previous current financial year before we come to the current financial year. Then if I add all of this depreciation, they will give me the accumulated depreciation at the beginning. I've already calculated it here. It's 135,000, guys. Then my current depreciation now. But now when it comes to this PPE note, we are saying we want all the accumulated depreciation at the beginning of all those assets. Then we have to combine them and post them here, not like separately, but all of them. All of those accumulated depreciation at the beginning. I hope it does make sense. All of this accumulated depreciation from the current financial of 2017 to 2018 up until 2020 to 2021. If I add them, it will form or it will give me my accumulated depreciation at the beginning for the current financial year of 2021 to 2022. Then I come across accumulated depreciation as this much. Then we're moving all along to the fourth track. Remember, when it comes to the fourth track, we had a constant depreciation from 2017 to 2021, from the current financial of 2017 to 2018 up until the current financial of 2020 to 2021. So I'm going to add all of this depreciation here to get accumulated depreciation at the beginning for the current financial of 2021 to 2022. Then I came across the amount of 977,144. So this will be my accumulated depreciation at the beginning for a fourth track. You guys can confirm the calculation. So I'm moving all along to Tata track. And for me to get the accumulated depreciation at the beginning for the Tata track, I have to add all the depreciation from 2017 for the current financial of 2017 to 2018 up until the current financial of 2020 to 2021. Already we did them here. Remember, here we got accumulated depreciation at the end for the current financial of 2020 to 2021, which will be my accumulated depreciation at the beginning for the current financial of 2021 to 2022. So my accumulated depreciation at the beginning here is 552,410. I hope you guys still remember. You can go back to the recording whereby we did the calculation for Tata track. Remember, I said to you, the accumulated depreciation at the end of the previous year, it will be the accumulated depreciation at the beginning for the current financial year that you'll be focusing on. So this was my accumulated depreciation at the end for my previous year. Then it will be my accumulated depreciation at the beginning for this current financial of 2021 to 2022. I hope I'm not confusing anyone. Then we're moving all along to Nissan track. So even when it comes to Nissan track, we had the constant depreciation. So my accumulated depreciation at the beginning for the current financial of 2021 to 2022, it will be all the accumulated depreciation from the current financial year of 2017 from the current financial of 2017 to 2018 up until the current financial of 2020 to 2021. That will be my accumulated depreciation at the beginning for 2021 to 2022, which gave me this amount when I did my calculation. You guys can confirm the calculation. So what I'm just going to do here, I'm going to add all my accumulated depreciation and post them, all my accumulated depreciation at the beginning, and post them here as my accumulated depreciation. So let me just see whether Excel will perform the calculation. I will start with this one. I will start with this one of Tata Truck. Then I will take the Nissan. Then from Nissan, I will move all along to I'll move all along to Ford to take its accumulated depreciation at the beginning. And then I'll move all along to the Mercedes-Benz truck. Then let's check the total. Here it's my total as of my accumulated depreciation at the beginning. Right, guys? Okay. Hey, it decided to act up again. Okay, let's just like repeat that because of Excel it's acting up. Okay, let's repeat our calculation again. Excel. Okay, so it's equals to we will start with our accumulated depreciation at the beginning of Mercedes-Benz, then moving all along to Ford truck, then moving all along to let me just take it slowly so that then we have the Tata truck, then we move all along to the Nissan truck at the beginning, then I'll come across my total as it is. So guys, here I'm not going to put brackets because I've tried to put brackets here. Okay, let me just put my brackets here so that it cannot change the formula, because of if I do it like this, it end up changing the formula. So I'll open another column here, guys, only for the one that I have to put on brackets, right? So it's brackets, it indicate that it have to be subtracted, or it indicate the negative. So it's negative. Thank you. It have put in already a negative sign. So for me to get my carrying value at the beginning, I will have to subtract my cost price at the beginning. And subtract it with my accumulated depreciation. Then I come across my carrying value at the beginning as that much. Then very important when it comes to the depreciation here. So when it comes to the depreciation, guys, please, when it comes to the depreciation, we take all the depreciation of the assets, regardless of whether it was disposed, it was new, it was old, all of the assets, even the disposed one, we take its depreciation. It's not like the general entries, right? So here we take all the depreciation, regardless of whether the assets is old, regardless of whether the assets is new, regardless of whether the assets is sold. So we will take all the depreciation of sold, new, and old. Here we go. Let's start first with our Mercedes-Benz, right? So yes, I'm not going to show my calculation, but I'm just going to speak up. I'm just going to speak up on what you have to do. The depreciation, we take all the depreciation of the assets, the depreciation of old, the depreciation of new, the depreciation of sold, right, guys? So my first depreciation that I'm going to start with is the depreciation of the Mercedes-Benz. So it's my depreciation of the Mercedes-Benz. I'm going to add it with the depreciation of Ford. So how much was my depreciation of Ford? This was my depreciation of Ford. Guys, right, guys. Then I'll add it with the depreciation of Tata Truck. Where was my depreciation of Tata Truck? Here we go. here it's my depreciation of Tata truck. Then I'll add it again with the depreciation of Nissan. Here we go. Here's the depreciation of Nissan. Then I will add it with the depreciation of Mazda. Here we go. This is the depreciation of Mazda. Then up to so far, we didn't have any assets that was bought, sold, or new, whatever. Then here we are going to get our total of the depreciation. So this is our total of the depreciation. Please, guys, show it in brackets. So under column 3, it's actually the amount that I have to show in brackets. But like then, I'm not going to show the brackets on column 2 because of it's gonna mess up my formula. It's gonna mess up my formula. Okay, brackets. Right, guys. Then now I'm going to move through to accusation. Accusation is actually the cost price of the assets. It's actually the cost price of the assets that was bought during the current financial year. Remember, according to our additional information, we had a Mazda bomb truck that was purchased during the current financial year. What was its cost price? If I still remember well, it was 1,200,000. That was the cost price of Mazda bomb truck. We can confirm that. Yep, it's 1,200,000, the cost price of Mazda bomb truck. So here we go. That's our cost price of. And guys, very important. Very important. So guys, when it comes to this part here that I've just shown here, this is the movement. This is the movement of the recognized assets. This is the movement of the derecognized assets. So guys, because of you have already prepared your journal entries, please don't stress. Just go through to your journal entries, take those amounts and post them here. But according to our information, we had how many assets that were derecognized? We had 2 assets that were derecognized. So in case whereby you have to come up with your cost price here, you'll come up with your cost price of the first asset and also the cost price of the second assets. So let me just emphasize this. So here, guys, when it comes to our this part, right? So this carrying amount, it will be our derecognition from our general entries. This is our carrying value. And remember, when we talked about this derecognition here, we said this derecognition is more like a carrying value. The very same amount you have written here on your journals, you just post it in your PPE note and you collect marks, guys. So when it comes to cross-carrying amount here, guys, cross-carrying amount, it's actually the cost price. Here, it's actually what you did on your journals. You take everything as it is like this, everything as it is like this, these 3 major accounts that I've told you guys about. You just take them as like that. Then you just transpose them to your PPE note. So under this cross-carrying amount here, we record the cost price of the assets that we recognized. Then when it comes to accumulated depreciation here, it's actually accumulated depreciation at the end of the assets that we recognized. Let me just take you back to your journal entries. Remember what I said to you here. I said to you guys, you're going to take into account the accumulated depreciation at the end of the assets that was recognized, which is exactly the same accumulated depreciation at the end, or the accumulated depreciation on your PPE note of the recognized assets that you have to recognize here. Very simple. But now things change when it comes to the PPE note. Your carrying amount here, it's going to be in brackets, and your cross carrying amount here, it's going to be in brackets. So what I'm just going to do here, I'm just going to add both cost price of the fourth vehicle that was disposed, that was donated, and also the cost price of what is this? It's Ford and Tata truck, right? So I'm going to write both of their cost here, guys. So I'm just going to go through to my calculation. What was the cost price of the first asset that was disposed? Okay, let me just start first with the Ford truck. It was 1,900,000, guys. Then I'm going to add it with the cost price of the Tata truck that was recognized too. So let me just move, which is how much? Which is 1,800,000, guys. So let me just remove what I've written and combine this amount here. Okay, so sorry for that. I want to write this amount so that Excel can perform calculations for me. Let me just combine this amount. Yep. So, like I said to you guys, here when it comes to cross carrying amount, it's actually the cost price of all the assets that were recognized during the current financial year. So, I've said to you guys, it's going to be the cost price of the data truck that was recognized plus the cost of fourth truck, which is 1,900,000. Then you get your cost price, guys. But this cost price, it's always in brackets. Remember, I said to you in column 3, I'm just going to show all the amounts that have to be in brackets, right, guys? Because of when I put the brackets in column 3, it messed up my formula. So it's how much is 3,700,000. All right. Alrighty, then let's move all along to our accumulated depreciation. When it comes to my accumulated depreciation, I'm just going to take all the accumulated depreciation at the end of the assets that we recognized, which is the very same accumulated depreciation we've put in our general entries. So what was my first accumulated depreciation? So the first truck that was disposed, it was what? It was starter truck. Then here it is its accumulated depreciation. But then can I just please combine it? Let me just combine it so that you can make simpler for Excel to perform the calculation. Let me just combine the amount. I'm sorry for that. Let me just combine it. Then fourth truck, it's already combined. Okay, then let me go back to my accumulated depreciation. So let me just put equals I, then add accumulated depreciation of the Tata truck. Or is it it's 615,000. Then I'm gonna add it with the Ford truck. How much is it? Here we go. Excel, what are you doing now? Okay, then here it will be the amount of my accumulated depreciation. Very important, this accumulated depreciation is not the same as accumulated depreciation at the beginning and also accumulated depreciation at the end. This one, it's positive. It's positive. You don't show it in brackets, please, guys. Hence, I didn't put it in brackets in column 3, right? Then we're going to go through to our carrying amount. So for me to get my carrying amount, I will have to take this amount, then I have to subtract it by my accumulated depreciation. Same formula that you know, guys. Then I'm going to get my carrying amount at the end. Or simple, you can just go, you can just like combine your derecognition, the derecognition of the Tata truck and also your the recognition of fourth track, then you will come across the carrying amount, or you can do it in this way where you're going to take your cross carrying amount, subtract by accumulated depreciation, then it will give you carrying amount. Then I've said to you guys, this carrying amount here, it's in brackets too. Please, guys, show your brackets. Then here we go, very important one. So when it comes to cross carrying amount at the end, what is the formula? The formula is cost price at the beginning plus acquisition or additional any assets that you bought during the current financial year, subtract by the cost price of the assets that were recognized. So let's go to our calculation. So here we are going to take this cost price at the beginning plus my acquisition plus the minus the corresponding amount of the assets that were recognized. I hope you guys, it makes sense. The formula is cost at the beginning plus the acquisition, subtract by the cost of the assets that were recognized. Then you will get your corresponding amount at the end. So it's cost at the beginning. I will add it with my acquisition. Then I will subtract it with my disposed assets, with my disposed cost of the assets that we recognized, right? Then I will come across the amount of 9,200,000. This is my gross carrying amount at the end. Then here we go with our accumulated depreciation. So the formula for accumulated depreciation is accumulated depreciation at the beginning plus your current depreciation subtract by accumulated depreciation of the assets that were disposed. Remember, I've said to you when we start this part here, it emphasized the disposed part. So anything here that we're going to get here, it's for the disposed or the derecognized assets. So here is the carrying value of the derecognized assets. Here is the gross carrying amount of the derecognized assets. Here it's accumulated depreciation at the end of the derecognized assets. So I have to take accumulated depreciation at the beginning plus my depreciation, subtract by accumulated depreciation of the derecognized assets. Then I will come across my accumulated depreciation at the end. So let's go. Accumulated depreciation at the beginning, I will add it with my current depreciation, then I will subtract it with my accumulated depreciation at the end of the derecognized assets. Then I will get my accumulated depreciation as that much. So it's also in brackets. I will indicate all the amount that have to be in brackets in column 3. So it's 2530715. I hope you're still on the same page. Then for us to get our carrying amount, we will just like have to take our cost at the beginning, then we subtract it with our accumulated depreciation at the end, then we will get our carrying amount at the end. Then the very same this carrying amount at the end, guys. Please, when you are required to prepare your statements of financial position, you will have to recognize this amount, carrying amount at the end under your non-current assets, under your SASC or line item as PPE. You will record this carrying amount at the end. There you go, guys. Welcome to the end of our session. So yeah, guys, please subscribe to the channel, share the content to your fellow classmates and anyone who you know who's doing a first year of BEC and also the second year student who are doing BCom accounting. So here, guys, in EDU-GURUS, let me just share my video for those people who don't know me so that you guys can know me. I've been working the whole day, guys. I've been working the whole day. So for those who don't know me, let me just show it fully so that you guys can see me. Okay, let me just stop sharing the screen so that you guys can see me. Stop sharing the screen. I don't know why it isn't gonna show up. Okay, guys, it doesn't wanna show the whole face of mine. But for those who don't know me, this is me. This is for EKK video for me degrees. You know, guys, when you got a degrees, guys, you got it all. You don't have the best, but then you got it all. So I've been on campus recording for the whole day. So yeah, guys, this is me. For those who don't know me, this is me, aka Video, the one who've been recording the session. I'm the one who've been recording the session, guys. So please, guys, please subscribe to our channel. Then, guys, we still have the print. The print is still running out. So please, guys, if you are interested to buy the print, please WhatsApp us on 083 427 3112, or you can send us an email on edu101gurus@gmail.com. Guys, we are available 24/7. Then, guys, please, we are preparing for the mentorship, guys, right? So as EDU-GURUS, we decided to offer free mentorship, not free. Okay, guys, so that's EDU-GURUS. We're going to provide you guys with some monthly mentorship, guys. So if you are interested, guys, to be part of us, of our monthly mentorship, guys, please WhatsApp us, guys, so that you can be part of us, part of our monthly mentorship, guys. We will really appreciate your support. Join the monthly mentorship, guys. So let me just emphasize everything about this monthly mentorship, guys. Monthly mentorship are not free, right, guys? So the monthly mentorship, they are not free, guys, right? Yep, here we go. Here's the full screen. So, guys, monthly mentorship are not free. So this is how we are working when it comes to the monthly mentorship, guys. We are charging per hour. So as for grade 11s, we are going to charge you guys 30 rand per hour. Then as for grade 12s, we are charging you guys 40 rand per hour. Then as for first year student, we are charging you guys 50 rand per hour. Then second year student, we are charging you guys 60 rand per hour. Then the maximum hours for a monthly mentorship, guys, it's 10 hours. It's actually 15 hours for grade 11 and grade 12, guys. Then 10 hours for first year and second year. So when it comes to a monthly mentorship, guys, you are required to pay at the beginning of the month, or at least within that week or the first month, guys. So the payment is required within that first week of the month, so that you guys can qualify for this discount. This is actually not the price that we charged, but we offered you guys some of the discount so that you guys cannot pay that huge amount when it comes to monthly mentorship. So when it comes to monthly mentorship, guys, we provide you with the materials. We are going to set special notes for people who are going to be part of the monthly mentorship. Then we are going to set our own questions for those people who are going to be part of the monthly mentorship. So guys, the question that we're going to set, they're not difficult. Chill out, guys. Some of people are saying that the Guru's questions are difficult and everything. No, the Guru's questions, they're just there like to test your accounting skills and everything. Right? But I understand. So, guys, in monthly mentorship, we set the questions according to your level of understanding. I'm not just going to set, I'm not just like going to wake up and set a question for you. I'm going to set a question according to understanding, the question that will build you or that will develop you. So I'm not just like going to set a question that you guys won't understand and everything. So monthly mentorship, we provide you guys with everything. I'm not be the one who's going to host all the session. I'm not going to host all the session for monthly mentorship, guys, right? I'll be working with my tweeters, some of my tweeters. They will be also part of this monthly mentorship. So I'm not just like going to work alone, but I'm going to work with my people, my tweeters. So guys, please do what you do best. Join the monthly mentorship on our page 3427312, guys. If you want to contact me, get more information about monthly mentorship. So yeah, guys, I'm signing out. This is your boy EK, give you from EDU-GURUS. You know, when God has no way, there ain't no ways you guys gonna go wrong. We're not the best, but we're trying our level best to give you guys professional based videos. So let's reach this video to 100k. No, not 100k, but 1k, 100k is too much. So let's put this channel to 1k subscribers, 1k likes, guys. So let's prepare for examination. We are still there to support you. We are still there with the public service. We are still there in private sessions. We are still there in monthly mentorship, guys. This is still your boy EK Kivira from EDU-GURUS. You know, when you got me, guys, you don't have the best, but then you got it all. Trying all my level best to give you best professional sessions than the way I can, guys. So this is me signing out. See you on the next video. Don't forget to like, share, and subscribe. I'm out. Dango. I love you all, guys.